snake this straight quick, you motherfucker.
What's good, what's good, what's good? It's your boy, the Wall Street Trapper, man. Welcome to another amazing episode of Trappin' Tuesday. Listen, man, you could have been anywhere, but you chose to be here. This is the dopest show on the block. Listen, today is Mardi Gras. I just need y'all to understand the type of sacrifice that I'm making. I need you to understand how much I love trapping with y'all. Because as a person who's born and raised in New Orleans, Mardi Gras is a holiday. But today is Trappin' Tuesday. So y'all already know. Listen, man, if you are an old trapper, you've been trapping with me for a while, welcome home. Come get a seat at the table. If you're new here, welcome to the trap, man. Hold on, I need to turn the bass on. Let me say that again. Welcome to the trap, man. There we go. There we go. All right, man, listen, man, y'all know our goal here is to help you build legacy. Our goal here is to help you construct a massive portfolio so that we don't have to get out of the mud, we can get out of the market. Now, man, we got some amazing things to talk about this week. But I want to start off by saying you cannot enter old spaces, new spaces, with old thinking. And since the majority of us don't come from wealth, it is of extreme importance that we develop new habits, new relationships, new perspectives, and new language. Because if not, I want you to know you are dwelling in your desert place. no matter how much you want to improve, if you do not have the audacity to demolish your current financial prism, then the lens in which you view abundance and wealth will always be diluted. We understand that the stock market prints money. We understand that real estate is a place for us to take advantage of taxes. We understand that owning land is probably the best thing that you can ever do. But if you don't change the prism, if you don't come from behind that fear you have of investing, it's the fear of losing money. It's the fear of if this investment doesn't go right. It's the fear of saying this is my last dollar. If you don't change that perspective, you can never build wealth. The crazy part is that a lot of us have inherited those mindsets. There is a conditioning that must take place. We're losing the battle not because we don't have the resources, but because our capacity hasn't been expanded. And we are tired of living paycheck to paycheck, overwhelmed by bills, but we keep celebrating things that mean nothing to our overall mission. When is the last time you celebrated just making that investment? When is the last time we've celebrated paying off a credit card? When is the last time we've celebrated mapping out the business plan, the strategy, and then executing? But yet, 73% of Americans live check to check. But yet, credit card usage is up. But yet, we blame the systems, we blame the governments, we blame all the institutions, but we don't take responsibility. So today's episode is called The Audacity to Choose Wealth. The audacity. And so when you look at the word audacity, it means a bold move. It means sometimes putting yourself in danger. Are you willing to put yourself in danger for the greater good? Your wealth opens doors for those who didn't know those doors exist. Your investment, your blueprint, you being the architect of your family's legacy, it takes audacity. It is Black History Month. And so I asked myself, how much audacity did Harriet Tubman have? How much audacity did a Martin Luther King and a Malcolm X have? How much audacity did someone like Rosa Parks have? Or Ruby Bridges? It takes a certain type of mental fortitude to say that you are going to be an outlier, that you are going to change the game, no matter what the outcome may be. Speaking on myself, I had never seen like a real successful business. I've never encountered with like a real millionaire. I never saw no one really build that business from bottom to top. But I had the audacity to do it. My daughter, 1 year old, I had the audacity to start that custodial account. And at 7, it's become a habit. So I ask you right now, what do you have the audacity to change? Because you are laying the blueprint for people you have not seen. You're laying the blueprint to a world, to a lifetime. You are laying the blueprint to people who will walk into a world that they do not know exists yet. I often say the opportunities that we don't take advantage of become obstacles for those who follow. What opportunities are you providing? What wins are you telling them that they can accomplish? I think about my daughter being here. She's been out of school for the last couple of days. She's been here every day. I want her to get familiar. I want her to get familiar with seeing her father start something and create something that will soon be hers. I want her to get familiar with understanding how it is and what it takes to be a leader. Familiar. We often avoid the things that we aren't familiar with. We often stray away from things that we think gonna cost us a lot. Risk, avoidance. Nothing great can be accomplished without risk. No wealth can be attained without risk. So when you ask me sometimes, Trapper, what's the safest thing I can do? Sometimes I don't have an answer. Because honestly, I don't know what safe is. I know a life of taking risks. I know a life of being on the edge. I know a life of risking it all. Because what you don't know is not a reason for you not to do it. What you don't know is not a reason for you not to make that bold move. So before we get into today's episode, my question to you that I want you to live by, that I want you to write down on a piece of paper is, do I have the audacity to choose wealth? And two, I'm gonna let your beat ride for a second. I want you to turn it up a little bit more, because I want them to think on that. Give me a little beat, Tootie. Give me a little beat, Tootie. Don't be cheeky with it. Don't be cheeky with it. Give me a little more. I want them to hear it. Audacity, y'all. Yeah. I like it. I like it. I like it. I think he been working on that all day. Tonight gonna be one of them nights, y'all. Hey, in the track, let me tell you, like, how you feel about that Tootie beat. Let me hear it right quick. Audacity. Audacity to make the first investment. Audacity sometimes to walk away from the job. Audacity to start the business. Audacity. Are you willing to risk it all? Are you willing to go in the hole? Because when I think about planting a seed, I think about digging through the soil. I think about putting the seed down, so the seed gotta go down. And then I gotta nurture the soil so that the seed can come up. Audacity. Tootie, that beat fire. If I was a rapper, Tootie, let's give Tootie a round of applause for that, man. Audacity. Oh. Hey, I feel something tonight. I feel like tonight somebody gonna make a bold move. I feel like somebody tonight gonna say, you know what, man? Tonight I'm making my first investment when the market opens up tomorrow. I feel like tonight somebody gonna say, you know what, Trap? It's my time. I feel like tonight somebody gonna say, I'm unanchoring myself from the financial trauma. I feel like somebody tonight gonna say, 2023 is my year, and they mean it. Let's talk about audacity, man. Let's go, man.
I'm broke, baby.
All right, man, listen, man. Y'all know, man, before we start every show off, First, let me say this. Like, subscribe, comment, and I just learned something new, y'all. You got to hit the bell. Jose just taught me about that. You got to hit the bell. Bing. That way you're going to automatically come through when we come through. Let's get the likes up, man, before we get into it. Y'all already know what it is, man. We 17 minutes in, Jose, and we almost at 1,000 people, man. It's getting faster and faster, man. I like this, man. But before we go on, let's start off with our Trapper mantra, y'all. Let's get it. Let's get it big. And then we're going to get into the information, y'all. But before we start, man, let's do it, man. I am a certified Wall Street trapper. I'm confident in my ability to make great investments. The stock market is a machine that prints money, and I am more than capable of operating that machine. Not only will I free myself, but my family will eat for a lifetime based off the information I apply today. That's audacity. I'm a money maker and a wealth builder. Today I break the chains that anchored me to that poverty mindset. That's audacity. My ancestors will smile because I have turned our last name into an asset. My family's purchasing power will increase indefinitely. Today I make the declaration that no longer will I be a slave to money. No longer will the generations behind me inherit lack. No longer will I submit to selling my time for money. That's audacity. I am a first-generation millionaire. I am the architect to my family's legacy. I am a certified Wall Street trapper, and Wall Street looks like us now. Well, we talking about audacity tonight, y'all. We talking about audacity tonight, y'all. Let's go, man. I'm gonna get with y'all a little later. I had to get them off there, yo. They got a free seat to the house. They got to come through. Listen, man. Tonight's gonna be one of them nights, man. I'm not gonna lie. We had a lot going on today. I know a lot of people have been scared over the last couple of days of what's been truly going on in the market, but that's what Trappin Tuesdays is all about, man. We here to improve your confidence. We here to make you look at the market and see red days and get happy. We here to change your philosophy and increase your financial fortitude. Oh, I like that one. God damn, I like it, that one. All right, man, so listen, this segment, first segment is called Word on the Street, y'all. And y'all know if you're new here, Word on the Street is when we just give you the game on how to navigate on what's going on in these streets. First, man, let's start off with all indexes were down today. Every last one of them, yo. Blood in the streets. But for us, what does that mean? That means increasing our network, y'all. So today we got some things we're going to talk about. I'm going to talk about some things that I saw. I'm going to talk about some things that I think that we should be a part of. So let's get to it, man. Let's get in my notes, man. I be having notes for y'all for days, man, right? All right, first and foremost, let's talk about this, man. Let's do our heat check. Let me get my heat check up, man. So today we was at 1.5. So if you know me and you know we've been talking about this heat check, I hope by now it's starting to make sense to y'all. Right? I hope it's starting to make sense to y'all what the heat check mean. Right? So let's talk about it. So today we had 3,375,835 calls. So you understand, for all my options people, what do we understand by these calls, right? So calls mean that the people are optimistic about the market, right? People are saying, yo, I feel that this stock or these indexes are gonna go forward. They're optimistic. But our put call ratio today is at 1.05. What does that mean? So we all know that what I've been telling us for the last 31 weeks is that anytime the put call ratio is over 1, we know that the market is pessimistic. It's bearish. It means there's blood in the street. So we've been seeing that. Anytime the put-call ratio is under 1, we know the market is being optimistic. Today, I'm going to bring out my brand new toy, the digital whiteboard, because we're going to break down the VIX. And I felt like y'all needed to see it on the whiteboard because I know I was going to have a lot of people in the comments like not really getting it. And my goal is to make sure you get it. All right? So we had 3,537,795 puts in the market. That means the sellers was out. Remember, every day in the market, there's a competition between buyers and sellers. Any days that the sellers take over, that means the market is bullish. Bearish, I'm sorry. Anytime that the sellers, that means people are selling, people are moving from stocks, people are getting rid of This is another thing about sellers, y'all. A lot of those are shorts. People are shorting stocks. I'm going to get into that a little later. Today going to be one of them days. So today is a day you need to have your pen and pad. Donnie, let me ask you a question. My girl Donnie's in the building today. She was once my business coach. I see you got your students in here. You ain't tell them bring a pen and a pad. My man got the pen and the pad. God damn. I like that, man. Let's go, man. I apologize. Anita Baker, baby. All right, so listen, man. Let's go a little further. All right, let's talk about the 10 industries today. Listen, man, I'm just keep it real, man. Everything was down today. Everything was down today. I'm talking about everything was down today. My dog Zay said that thing woke up today for sure. Listen, everything was down today. Everything. So here's the thing. I don't want you to panic about down markets. So let's go a little further. Watch this, y'all. I want you to understand this. Hold up. Before we go to that, let's just bring them straight into the recession portfolio, Dave. Let's bring them straight into it. All right, so, man, we made some moves today, man. So if you are in the triple beam team, we told you about something today. We said, listen, we're going to sell the XLK play. I'm going to tell you why. We're going to get into this. Dave, is the VIX after this? I want to throw the VIX. After we do the 2 recession portfolio plays, I want to run up with the VIX. Jose, we're going to run up with the VIX after this, Jeremy. So watch this. Today, I got up early this morning. So first of all, let's talk about it today. So these 2 positions are still up 12,000. But you can see the NVIDIA play, we gave up 6,400. You can see the Tesla play, we gave back 3,500. I'm not panicking because both of them are still up. So this one is up 99%. Remember, this is all the house's money. Remember, the Tesla play is all the house's money. Because remember, the Tesla play was up 130%. We had 18 contracts. We got only 4 contracts left. So this all house money, so we not panicking. The goal is to always get in the house money. That's the goal for us always. The NVIDIA call is actually at 88%, but I sold some of it. Because I was over 50%, so I sold some of it. So it's not automatic house money, but I'm still in the green. So here's what I told people in the triple beam team. I said, listen, here's what we're going to do. I said, we're going to sell the XLK play. And I told them, here's what we're going to do. We're going to sell it. Now, y'all know we was up. On the XLK play about 14%. Right? I was up on the XLK play about 14%. We was probably up about $6,000. But, man, I'm not going to lie to you, boy. When the option market go, it go. You hear me? It go. So one of the things I told people was, I said, listen, check this out. So last Tuesday, I said, listen, I think the market's going to be choppy because of the CPI numbers. I said, I think the markets are going to be real choppy. And I give you 2 options. I said, listen, the first option is you can sell now because they were still in the green. We was about 8% up. I said, you can sell now, take the losses because next week the market's still going. I said, I think the market's going to be choppy. If you in a triple beam team, I actually said that. You can put it in there. So then I said, or you can thug it out, but you got to be able to judge your risk tolerance. Because once it gets choppy fast. And if you don't understand your emotional risk tolerance, this game will eat you alive. Like, I know mine. So some people stayed in, some people took their wins like, yo, Trap, I'll take the small win. I'm good. I was like, okay, cool. Here's what we did. Up until about Thursday, we did good. Friday, we kind of was all right. But at the end of Friday, we went from being up 2% to being down 4%. So what I did was I started looking at the VIX. So I'm going to bring you right here and I'm going to teach you about the rule of 16. I'm going to show you why today I told the trappers, go ahead on, sell the XLK play. I said, sell the XLK play. We'll wait until the VIX get in where I wanted, and then we'll call the play again. So we sold the XLK play probably for a small loss. I think I probably took a $1,000 loss on it, maybe a $1,500 loss on it. But here's why. All right, so I'm about to take you to the board right quick and show you the rule of 16. All right, let me come around. George, lock in on me. I got it. Yep, don't worry about it. All right, y'all can see me right quick, right? Y'all can see me, y'all good? Dave, we good? All right, cool. So now I'm going to teach you about the rule of 16 right quick. So I'm going to put it right here, the rule of 16. And I'm going to talk to you about it later. I got a whole slide for you so you can see it. So the rule of 16 says this. There's 252 trading days in a year. 16 is the square root. 16 is the square root of that, right? So here's what we're going to do. Let me give you a chart. How does this work, Trap? Well, this is how this works. So this helps us with the VIX. God damn, I'm teaching right now. Donnie going to tell me I could charge for this. Trap, we could have put a price tag on this. All right, so the rule of 16 says this. If the VIX is trading at 16, then the rule of 16 says that within the next day or weeks that the VIX, the market, the S&P will go up by less than 1%. Well, Trap, how do you get that number? Why did you come up with that? So the rule of 16 is automatically the square root of the trading days in the year. The VIX tells us about the volatility in the market. Right? The VIX tells us about the volatility in the market. I like this board, y'all. It's my new toy. So the VIX tells us about the volatility in the market. Now watch this. Last week I told us what? Week before last I said, look, episode 29, I said the VIX is at 20. If it crosses its 50-day moving average, which was 21, then that tells us that the market is being fearful. If the VIX, I told us in episode 29, if the VIX crosses the 50-day moving average, it was at 20, 50-day was 21, the market is being fearful. Today, the VIX was at 23. So because I saw the VIX was pushing past the 21, it immediately told me to tell my trappers, yo, we're going to take a small L because we know fear is kicking in. Fear is kicking in. All right, let's go a little further. Ooh, we cooking right now. Golly, I feel like I'm on fire. All right, so let's go a little further. Let's go a little further. Let's go a little further. We're going to go back to the rule of 16. All right, Trap. Cool. Rule of 16 tells us this. If the VIX is at 16, then it tells us that, so watch this down, 16 equals 1%. Right? Watch this, a 1% move. So if the VIX is at 16, it tells us that the market can move, should move, watch this, 2/3 of the time, 1% either way. 2/3 of the time. Okay, let's go a little further. If the market is at 24, then the market should have a 1.5% swing. Well, Trap, how is that? Well, 16 divided by 24 is what? 1.5. Yo, I'm in school right now. 16 divided by 24 is 1.5, right? Watch this. 16, if the VIX was at 32, then that means the market will move by what? Watch this what I'm gonna put right here, y'all. VIX, VIX, VIX. I'm giving y'all some game right here. Nobody never gonna teach y'all this. Watch this. If the VIX is at 32, then that means the market should move by what? My dog George say 2%. That's right. 2/3 of the time. 2/3 of the time, because nothing is absolute. So we talking about percentages here. Now watch this, y'all. So if the VIX was at 23 today, that tell me the market should probably have somewhere about a 1.47% move. So because I'm using the rule of 16, I'm already saying, well, the market probably this tomorrow and the next day, I'm gonna probably see the market swing, go down. I'm gonna see it. I'm gonna see it. So for me, by me using the rule of 16, that always works for me in volatility. I said, yo, Triple Beam team, let's get out of this option. Let's take the L right quick. Now, Trap, how you know the market gonna go up? Well, here's what I'm looking at. Yo, this is good. Golly, this is good, y'all. Donnie, how much somebody selling this for, Donnie? 1997. So watch this, y'all. Stop, watch this. Watch this. So now we looking at economic environment. Now we're looking at economic environment. So here's what we're saying. Economic environment. Trap. What was in the environment today? Well, CPI data, inflation, Russia dropping more bombs, debt ceiling. These things are in the environment. And Powell threatens rate hikes. This is the economic environment we're in. CPI data, inflation still hot. Jerome Powell is out that he may do 50% rate hikes. Debt ceiling, the United States about to default, and then Russia drops more bombs on Ukraine. Boom. These are the things that set up for what? Fear. Fear. So if these things line us up for fear, if we understand the environment, and then so now I understood the environment. I looked at my rule of 16. I looked at the VIX over the 50-day, because on episode 29, I told y'all this. Did y'all listen to me? Probably not. On episode 29, I told y'all that all these things lined up. So when all these things lined up, I can go holler at my people and say, hey, them people out there, it's hot outside. I can say, look, like, dude, don't lean on me. Code red, get the chains off the door. The enemy's here. Right here. So now I said trap, triple beam team, get out. I just smoked y'all ass just now. Hey, I'm good with the board, yo. So, as we tap into the rule of 16, it is important that you learn that. It is important that you learn the rule of 16. Why? Because it can also help you with entry and exit points. Now, if you're somebody that loves technical analysis, the rule of 16 will help you out tremendously. It will help you out tremendously. If you're somebody that loves fundamental analysis, the triple beam will help you out tremendously. So, let's go back to the recession report. How y'all like that just now? Let me see in the chat, man. How y'all like that just now? How y'all like that just now? Good. Good. Oh, Zay, I see you in the chat. Zay, how you like that just now? Talk to me. All right, so I want y'all to go study the rule of 16. Y'all can see I just brought it here just now. I want y'all to go study it so it can help you on your journey. All right, no commercial. Okay, so listen. So we told them, look, let's get out of here. Let's take the small L. Sometimes you got to be willing to take a small L in this game. We'll take the small L just to sit on the side. Watch this. And wait for the VIX to get back in the, we're going to wait for the VIX to get back in that greed range. We want the VIX to get out of fear and get into greed. Once the VIX get into greed mode, we can now get back in our options. Let's go, man. All we want to do is print money. Hey, my man, you taking notes? My man taking notes, man. God damn, take advantage of the opportunity, man. That's what I'm talking about, man. I feel some kind of way that you ain't taking notes. I feel some type of way that you ain't taking notes. I need you to be writing them in your notes on your phone or something. Make me understand that you taking advantage of this opportunity right here. This is VIP section. All right, let's go a little further. So, boom. I made another move today. So, remember I told y'all something, man. I said the market is always, so the recession portfolio is about me being actively managing this portfolio, right? So we buy great companies. I buy them at great prices, but it's not so much as the buy and hold like my premium account. So for this one, we straight up making moves. So I let my winners run, or sometimes I take profit to move somewhere else. So as you can see, we strong here, but if you notice, something is missing here. Something is missing here. Something is missing here. The one thing that's missing is TPL, Texas Pacific Land. I had $150,000, and you can see it right here where we went back because we had about $60,000 in cash. We sold Texas Pacific Land, but I was up 8%. Now, mind you, watch this. Watch this. I was up about 30-something% on it. And in 2 weeks, I watched it go down 15%. Now, because this is not my premium account or my premier account, I'm able to move things around. So I told you I'm actively managing this account. I'm actively managing it. So I took away Texas TPL. We was up 9% when we sold it. We said we'll take that. So Trap, why did you sell it? Well, because the market right now isn't rewarding the energy stocks. It's not it. Energy XLE right now is down 3%. I'm up 8% on ExxonMobil. I'm gonna watch this for a minute, but once it gets to 5%, I'm gonna sell ExxonMobil. I'm gonna sell ExxonMobil because the market isn't rewarding energy right now. Right now. So remember, the Recession portfolio is just something I can show y'all. This is real money that we just gonna, our goal is to consistently beat the market. So we beat the market last year by 17%. We're gonna beat it again this year. That's our goal, right? All right, so we probably gonna sell ExxonMobil. Now here's the thing. We just opened up. And you can see this as of today at 6:18. So this for real. We just opened up Masters of the Trap. So with Masters of the Trap, some people about to be mad at this. Because they've been waiting for this, and I'm putting it in a whole nother package, you heard me? So Masters of the Trap, we gonna give you the triple beam. So we just opened up Masters of the Trap, so you get the triple beam, you get everything else that's in the triple beam team, but you also will get a quarterly watch list, about 10 stocks that Trap looking at. Also, you'll get 2 weeks ahead of time before I make the move. You'll get it at Masters of the Trap 2 weeks ahead of time. So we just put up Masters of the Trap, so it's part of the Patreon. That's our top tier. And if you're already in a triple beam, you can upgrade to that. Masters of the Trap about to be crazy. So we definitely doing this. So again, you're going to get everything I do in a triple beam team, you get that. Plus with Masters of the Trap, you're going to get any moves I add to the portfolio here. You'll get it 2 weeks ahead of time before I show it. Plus, you'll get a quarterly watch list from me. So every 3 months, I'll just go through my watch list anyway, and I'll get like 10 stocks that I'm looking at. You'll get that. Master of the Trap, man. Let's go, man. Let's go, man. So here's what we want to talk about now, man. Let's get to it, man. I'm feeling it. How y'all feeling tonight? Let me know how you feeling in the chat. Let's talk about it right quick. Let me see it for a second. Let me see how you feeling in the chat, man. If you want to get in Master of the Trap, Jose dropped the Patreon in there so they can get to it if they want to get to it. If you already in anything, you can already upgrade to it. You will get access to the triple beam. So what is the triple beam? The triple beam is my personal discount cash flow formula. I put stocks on the triple beam. There's already a video in there to show you how to use the triple beam. It's game time. We turning up, man. All right, so your dollar is losing, yo. I want y'all to understand this, man. In order to build wealth, in order to truly play this game, no matter what it is, your money has to be moving. Your money has to be moving. A lot of us are bombarded by information. Save your money. Save your money. Save your money. That ain't the way to play this game. That ain't the way to win this game. That ain't the way to build wealth, y'all. I told y'all in episode 27, you should only be saving money to attain goals. Saving money to buy a house, saving money to buy a business. You should not be saving money just to hoard it. Just to go look at your bank account and feel like I got money in the bank. You should be saving money to make another purchase. And I'm not talking about some clothes. I'm not talking about a liability. You should be saving money to increase your wealth. You should be saving money to increase your purchasing power. What we see is eggs are going up, gas is going up, but wages ain't going up. That don't help the everyday person. That don't help the person working a 9 to 5. That don't even help the entrepreneur if you ain't running your business right. So when we talking about building wealth, yo, I need you to always have your money working for you. Because a dollar that's not moving is a dollar that's losing. Your retirement account, guess what? The majority of the people that's in the 401k and in the pension plan right now, guess what? They down. They down. I just talked to somebody the other day that said their 401k is down 39%. 39%. And guess what? You need about 74% to get that back. There's a knowledge that comes with investing in the market. There's a knowledge that comes with building wealth that the everyday person is not exposed to purposely. We talk about a premeditated, perpetual middle and lower class. Premeditated. That means it's planned out. There's a reason why they don't teach you certain things in school. There's a reason why they don't teach you certain things early. There's a reason why I just told a man today, hey, instead of opening up a savings account for your child, go open them up a custodial account. This is how we play the game different. There's mandatory things that has to happen now in order for us to build wealth. Mandatory. Learning how to navigate your way through the financial markets is important. I don't care if you like real estate more than stocks, but you need to be in stocks because there's money that's always working for you. I don't care if you like stocks more than real estate. You need to be invested in real estate. Why? Because there's so many tax advantages. You need to learn how to use IULs. Why? Because the Rockefellers did, and they gave us the blueprint. If you want to take a look at it, go look at J.P. Morgan, Rockefeller blueprint. You'll see it. It's so many people playing this game to win, and we just playing the game to survive. I understand that we got to break the survival mode. I understand that we got to unanchor ourselves. But listen, I don't care how much you want to do something. If you don't change the philosophy you have around doing the thing, then the thing will never get done. So you can come to Trappin Tuesdays every week and take notes, but if you ain't applying it, you're wasting time. I want you to build wealth not just for yourself. I want you to build wealth because your great-great-grandmother had a vision of freedom that she couldn't experience. I want you to build wealth because somebody in your family was a slave, or somebody in your family got off a boat, whether you was black, white, Irish. Somebody in your family was less fortunate. They had a vision of a better life for you and they couldn't attain it, and now you got the opportunity. I want you to build wealth because it's bigger than you. Every day I wake up to build wealth because I say my daughter has to inherit freedom. Not a dollar amount. Freedom. Opportunities. How in the hell we want our kids to live a life that we ain't have? How the hell we want our kids to get the things that we ain't never had if we ain't putting them in position to do it? I can only talk about experience here. Again, my daughter not in school because of the holiday. So now she's been in here with me every day, learning how to package stuff, learning how it works back there, looking at Trappin Tuesdays. She needs to learn how to be a producer because one day I want her to produce her own show. I've been buying her stock since she was 1. Why? So she can learn the stock market. Why? So she can say, Daddy, I own this. Yes, you do. Familiar with ownership. Having the audacity to choose wealth, y'all. You gotta have that. You tired of living paycheck to paycheck? What you doing different? You tired of going to your bank account and saying insufficient funds? What you doing different? I know you praying, but on the other side of that prayer, you gotta put some work in. You want to live the life, you got a life in your head that you want to live. I heard somebody one day say they want to have a life that they ain't never got to take a vacation from. Well, what's the blueprint to get you there? And if you don't understand that, then you just wishful thinking. Let's move on a little further, man. So listen, man. Damn, I was on a rant just now. I apologize. No, I don't. All right, so let's talk about it, man. So a dollar that ain't moving is a dollar that's losing. Listen, your money is seriously losing. Listen, eggs are up 70% over the last year. Gas prices up 37% over the last year. Food prices up 22% over the last year. The average electricity bill is up 14% over the last year. Used car prices are up, and 1 out of 4 Americans is 60 days behind on a car note now. 1 out of 4 Americans is now 60 days behind on a car note. We're just talking about transportation. Let's go a little further. Look at it. Year to date, all items up 6.4%. Food up 10%. Food at home up 10%. Food away from home, 8%. So we talking about just what it costs you to eat is increasing. Here's what I told y'all before. Everything is getting more expensive. Everything is going up in price but how much you're getting paid at the job. And it's not a shot at nobody that got a 9 to 5. I'm just telling you that your job ain't keeping up with inflation either. So the bank account ain't keeping up with inflation, the savings account ain't keeping up with inflation, and the job ain't keeping up with inflation. Something got to give. And then AI out here taking people's jobs. Something got to give. Something got to change. You got to change. All right, let's go a little further. And then we found out today by Mondelez Brands. He said that 75% of people always find room for snacks in their budget. 75%. That means you food and everything went up, but you found a way to buy some snacks. It said 89% of people are concerned about inflation. But look at the numbers though. This is his specific numbers. 89% of people weren't concerned about inflation, but yet they still found money to buy some snacks, and they still weren't 60% of the people weren't about if the snacks are available. That coincides back to what I was saying, y'all. Listen, in order to change some things around, you gotta get an Oreos up, yo. You gotta go be strict with the list. Right now, it ain't the time for you to be frivolous with your money. We have acquiesced into a place in our mind where we are accepting things without fighting. We are simply just saying, it is what it is. I can't do nothing about that. Once you have accepted that role, then that uphill battle to build wealth is tremendous. All right, let's go a little further, man. Damn, we are hour in. Shit. All right, man, listen, man, retail investors, here's what I do like about it, though, y'all. We spending a lot of money. We getting back into the market. This year alone, $1.5 billion have flowed into, it's called inflows. $1.5 billion has flowed into the market from retail investors. Over the last 3 years, I want you to understand something. Watch this. $9.7 billion from new investors have went into Tesla. $3.6 billion have went into the SPY. $1.8 billion have went into Amazon, $1.7 billion have went into Apple, and $1.4 billion have went into NVIDIA. So that means new investors are actually pouring a lot of money into the market. I want y'all to give yourself a round of applause, y'all, because here's what I want y'all to understand. Y'all way better. We've come a long way. We've come a long way. Even though we don't always understand it, we've come a long way. And I want you to be proud of that. I want you to tell your friend who's telling you the $100 ain't enough, I want you to tell her, get out your face. Your partner who's telling you, man, that $1,000 ain't gonna do nothing in the market, I want you to tell him, man, get up out my face. Because those are going to be the same people when your portfolio start printing money, that's going to be the same people that's going to say, hey, bro, show me how to do that. That's going to be the same people. And I'm not even telling you to tell them no. I'm just saying right now you got to have the audacity to choose wealth. Damn, Jose, I thought you was going to say, when I said that. I put that in there. Damn it, man. All right, let's go a little further, y'all. All right, man, so look, man, Warren Buffett, here's one of the things I really want y'all to tap into. So I did 26 portfolio audits over the last maybe month. Shout out to Ms. Leslie, she's been helping me do that. for my trap masters, right? So we've been doing portfolio audits. When I look at their portfolio, and I'm like, hey, let's add some more structure. Let's do some things about it. Warren Buffett owns 48 stocks, but he only believes in 7 of them. Of the $333 billion that Warren Buffett has invested in assets, 80% of it is in 7 stocks. 80%. 80%. So a lot of y'all around here with 40 and 50 stocks, the reason why you confused is because you got too many stocks in your portfolio. He owns 48 stocks, but he only has 80% of his money in 7 of them. 7. So that means the other 20% is moved around in 41 other stocks. I'm telling you that when you look at your portfolio, I want you to say, what's the 3 that I believe in the most? And I want you to go all in on them. Because you don't got the capacity yet to believe in 7. 7 going to confuse a lot of y'all. And I'm not taking it away from the Bible. Listen, we at the beginning stages of the wealth game. He been playing the wealth game his whole life. You in the beginning stages of the wealth game. So a good 5 to 10 stocks is all you need. I saw the people at Motley Food say get 25 stocks. How are you going to tell a beginner investor to have 25 stocks? They don't understand 25 stocks yet. They ain't broke down 25 in 10 Qs yet. They ain't broke down 25 10Ks yet. They ain't went through 25 earning calls yet. Ain't no way in the world a new investor should own 25 stocks. You should own about 5 to 10 stocks maximum right now, and you should know them like the back of your hand. Own 5 to 10, go all in on 3. 80% of them in 3, the other 20% you move it around. King, you took notes on that? That boy writing over there. I like that, King. I ain't mean to call you a boy. I apologize. I was thinking about this right here.
That boy is good.
I was thinking about that when I said it, King. I apologize. I ain't mean to call you a boy. I was thinking about this while trying to talk to you at the same time. You hear me? You feel me? If you don't, like, you're a beginner investor. Why do you own 25, 30 stocks? There's no, you want to know why the recession portfolio can beat the market? My max is owning 10 stocks. The more stocks I own, the harder it is for me to beat the market. That's why I just want to own great stocks. And if you want to get a little spicy, throw your ETF in there. I see you, Zay. Throw your ETF in there. So now you only got to own 6. You don't, listen, there's 6,000 stocks on the market, yo. Okay, let me give y'all a little gem right quick. Zoom in. Let me give you a little gem right quick. Zoom in real close. Watch this. It's free to open up a portfolio account. It's free to open up an account. Get you 10 stocks. Max out, do 80-20 rule. Go open another portfolio up. Get you 10 stocks. Open up another portfolio. Have a portfolio designed for everything that you want to do. You want to take risks. This is my risky portfolio. This is my dividend portfolio. This is my take risk portfolio. This is my I'm going to be chill portfolio. This is my Roth IRA. Listen, it's free. It's free. It don't cost you nothing. Get your portfolio 10 stocks. 10 stocks. Max out on 3, 80-20 rule. We don't got to change the wheel. The OG just gave it to us. He go 80-20. He got 48. He believe in 7. The other 41, he just seeing what they can do. All right, I'm going to go a little, man. I just cooked their ass again, man. They ain't paying attention. This shit sizzling over here. Hey. All right, babe, let's go. Let's go a little further. Here's the 7 stocks in order. Apple, Bank of America, Chevron, Coca-Cola, American Express, Oxy, and Kraft. Watch this. Apple and Oxy are the newest to the bunch. The rest of them he been owning, and for Kraft Heinz, he said he should have been sold this since 2014. But because he's so heavy in it, if he get out of it, it's going to top the market over. Speaking of Warren, guess what he just did? Here's my notes. I wrote this down. Warren Buffett just sold 86% of his holding in TSM. I don't got that up there. He just sold 86% of his holding in TSM, Taiwan Semiconductor, 56 million shares, gone. Put them back on the market. So if you own TSM and your stock went down, thank the OG. He sold 86%. He's been on Coca-Cola since $2. He's been holding Coca-Cola since it was $2. He's been holding Coca-Cola since $2. So look, watch this. I got the recession portfolio, but I also got my long-term portfolio. Guess what in the long-term portfolio? All I do is do what? Buy the dip. But I buy the dip based on my price points. So you got the recession portfolio, boom. Then we got the buy and hold portfolio that I'm just gonna hold out. All I'm doing is what? When the dip get to my price point, I buy more. I'm not trying to switch. I don't gotta reinvent the wheel. The man been doing it forever. What am I? If the goal to print money, we gonna print money. But if the goal is to gamble, go on and say you gambling. But here's my tone. Treat a gamble like a gamble, treat an investment like an investment. I just cooked the ass again. I'm on fire tonight. Let's go, man. Next one. All right. So, I talked to y'all about this, but I wanted to show y'all kind of that I knew this off the top of my head that I ain't need no PowerPoint to do this. I wanted to show you that I knew it off the top of my head. The PowerPoint really just be for y'all. I'm going to keep it real. All right. So, the VIX right now at 2332. If you go back to episode 29, what did we talk about? We talked about the VIX getting over its 50-day moving average, which was 20. Here we go. What I like for everybody in it, I'm going to put this out there. If you're in a triple beam team, if you in masters of the triple beam, don't trip on this. I'm going to give y'all a little more in-depth on this. 17 and 18 is between 17 and 19 is a perfect VIX number for us. Between 17 and 19. Now, we see a 52-week high of 37. At 37, we don't want nothing to do with the market unless you're doing puts. That ain't my thing. Right? That ain't my thing. Okay, the market opened at 21. Trap. Well, this was an indication. Once I saw the market open at 21, this is exactly why I went into the triple beam team and said, hey, yo, let's get out of here. It done crossed the 50-day moving average. The 50-day moving average was 21. Hey, I need to get out of here. Put my rule of 16 in. Oh, bet. I see a 1% happening. I don't got to play the guessing game. The math is in the math. The math is mathing. The data is dataing. The market is being the market. I'm not trying to fight the market. I'm going to let it do what it do. I'm going to be a counterpuncher. Again, 17 and 19, that's the VIX I'm looking for. Anything in this 23 range, I don't want to have nothing to do with that. I'm going to go on and chill. I don't mind sitting on the sideline. I want you to understand something. Sitting on the sideline is just like making money, because if you ain't losing money, you making money. All right, go a little further. Watch this. VIX is at its high since December. Boom. Well, Trap, how did you know to get out at 21? Well, because 21 was the 50-day moving average. It went from 21 to 23. Guess how much money we would have lost if we would have stayed in there? Instead of being down $1,000, I'd probably been down like $3,500. The VIX ended the day at 23. We got out of this play at 9 o'clock this morning. It's 9:30. As soon as the bell rang, bing, I put it in the group because I was already ready. I had already put it in, sell it. Boom. Trap's VIX confidence is 17 and 19. I got to see it come back down before I make a play in the options game at all. It got to come back down for me. All right, go a little further. Every year you can expect a 5 to 8% pullback at least 3 to 4 times a year. Today was one of them days. Today was one of them days. Every year you can expect to see a 5 to 8% pullback within a number of days, at least 3 to 4 times a year. So that's typically once a quarter. Sometimes you don't get it. So if I can see the VIX go back down anywhere between, if it ain't between 17 and 19, I'm chilling. That ain't that means that's too much fear in the market. I don't want no part of that. I don't want no part of that. Now, when it gets into that 19 range, I'm like, okay, let me see, now I can start observing. But right now, guess what I'm doing, y'all? Guess what I'm doing right now? While it's high like this, guess what I'm doing? I'm looking at how cheap the options contracts are. I'm putting 5 of them on the list to see where I want to go at. And whichever one get the cheapest first and the environment is supporting it, I'm going in. And if you're in the trap, masters of the trap, or you're in a triple bean team, bingo, you got it. I just cooked them again. Let's go a little further. And here we go. Rule of 16. You need to take a picture of this, right? Key takeaways. Understand how to use the VIX to help you indicate how high the next move may be. Next, use the rule of 16 to help you with your option strike prices. Third, use the rule of 16 to help you hit entry and exit points. Okay? Here's where I got the things at. When I broke this down for y'all too. VIX level, expected daily range, 1/3 of the time. So it's not 100% of the time, it's 1/3 of the time. 16 equals a 1% move. 24, 1.5% move. 32, 2% move. 48, 3% move. 64, 4% move. 80, 5% move. Watch this. During the pandemic, the VIX was at 50. The pandemic saw 4% moves in March 2020. During the pandemic, the VIX was at 50. Go fact check me. Go fact check me. During the pandemic, March, the pandemic, the VIX was at 50. You saw 4% move over 9 days. I'm cooking tonight. God damn, I'm cooking tonight, man. So, this screen was just for y'all. I knew this off the top of my head, y'all. I love when Diane in here. All right, y'all. Right quick. It's on screen now. I'm looking at it. Remember, it come up a little late. I'm looking at it. All right, listen, man, right quick. Go take a commercial break, man. Let's go to commercial right quick, man.
Official apparel for all certified Wallstreet trappers.
What's good, what's good, what's good, what's good, man? We back right quick. I'm going to do y'all a favor right quick. Dave, do me a favor. Put the rule of 16, the last slide, put it back up so they can screenshot it. There y'all go, man. Listen, I see y'all in the comments. We ain't tripping. We ain't tripping. Make sure y'all screenshot that so we can move on. Listen, man, I want to send a shout out to her. Appreciate the Queen Natalie for the super chat. We appreciate y'all for that. Aaliyah says hi. So I want to say something right quick, man. We dropped the merch last week, man, and we had a phenomenal, open couple of days. So I want to tell everybody, thank y'all. Because Trappers Apparel Inc. is not just about me. I'm going to keep it real, y'all. It's not about Trap. It's about us going into the world, letting the world know that we are the first generation millionaires. We are opening doors that make wealth easy, and we understand it. And I'm going to be real with you. It's for white, it's for black, it's for Spanish, it's for Asian, because here's why, y'all. Poverty don't care what color you is. Middle class don't care what color you is. But wealth don't care what color you is either. If you got the information and you know how to play the game. Certified Wall Street Trappin mean I know how to play the game. Wall Street looks like us now mean I know how to play the game. Certified Wall Street Trappin mean I ain't scared of the market. Wall Street looks like us now mean I'm going to put my family on. Certified Wall Street Trappin mean, look, we getting dividends for days. Certified Wall Street Trappin mean, look, we got rental property. Certified Wall Street Trappin mean I'm playing an options game. Certified Wall Street Trappin mean, look, retirements are good. Wall Street looks like us now mean we opening custodial accounts. Wall Street looks like us now mean we got brokerage accounts. Wall Street look like us now mean we got insurance. Wall Street look like us now mean we playing a game how it need to be played. Wall Street look like us now mean we see them playing a game, we getting them tax advantages, I mean we doing the same goddamn thing. So when I say Wall Street looks like us now, when you got a shirt on that say Wall Street looks like us now, that's what you representing. You ain't representing Trap. You ain't representing me. That's the uniform of you in this game of building wealth. That's the uniform. And I don't care what you on. I support all wealth building games. If you teaching people how to start businesses, guess what? Wall Street looks like us now. If you teaching people how to trade, freaking crypto, guess what? Wall Street looks like us now. If you teaching people how to get storage facilities, Wall Street looks like us now. If you teaching people real estate, guess what? Wall Street looks like us now. If you teaching people about taxes, credit, Wall Street looks like us now. It ain't just me. It's all us, y'all. This the movement. Everybody should have that Wall Street looks like us now merch, because we got to go into the world and let them know we ain't playing. We got to go into the world right now and let them know it's our time. There's a new whole bunch of millionaires coming. There's a $50 trillion wealth transfer happening. And guess what? We want in. So when we say Wall Street looks like us now, we letting them know if a nickel bag gets sold in the park, we want in. If a stock getting traded, we want in. If a real estate deal getting brokered, we want in. If you leveraging credit, we want in. Pre-IPO, we want in. I just flamed y'all ass just now. Tui should have had a beat on that, you know. All right, let's go, man. Let's move a little further. So listen, man. Hey. So this let me know something here. This was real good, man. So I saw this today, and I was looking at Wyndham Hotels and Resorts, man. And this was amazing when I saw this today. So Wyndham Hotel and Resorts, they don't manage or own the companies. All they do is franchise their hotels. Watch this, y'all. Watch this. They're the world's largest hotel chain. They have 130 million guests annually and over 834,000 rooms. We're going to go a little deeper. They returned $561 million to shareholders last year and another $445 million through repurchases. Now watch this. So this is what I'm going to talk to y'all about, because I need y'all to understand this and I need y'all to know this. I wrote this down because I said the trappers need to know this. If they don't know this, I'm not doing my job. All right. So it's called RevPAR. So I need you to get a pen and paper out right now. I need you to get a pen and paper right now so you can write this down. When you get a pen and paper, I need you to say in the chat you got your pen and your paper. When you get your pen and the paper, say I got my pen and paper, chap. This is one of them ones. Fam, you ready to write this down? We trapping, my guy. I like that guy. All right. So watch this. RevPAR. So when you're looking at hotel industries, so you're looking at when you're looking at hotels, when you're looking at Hilton, Marriott, when you're looking at hotel industries, this is what I want you to look up. You're gonna look up, remember I always tell y'all what to look for when you're breaking down companies. There's always something specific. So right now you're gonna look for RevPAR. What is RevPAR? RevPAR represents the generated income that's available per room. Listen to that again. It's the generated income that is available per room, whether or not the room is occupied. This helps hotels measure the revenue generated on every room they have. Now, here's what I want you to do. I want you to do some math. Wyndham has 843,000 rooms. Their RevPAR is up globally by 15%. 15% globally. So here's the homework. Here's the homework. Each and every week, I give you homework. Cut it 2 days. Each and every week, I give you homework. Here's your homework to see how much money they're making per room. Here's what I want you to do. If they have 843,000 rooms and their RevPAR is up 15% globally and 5% in the US, I want you to go look at their last earnings report and see how much they're making per room. We got the room. We got the rooms, 843,000. We got the RevPAR increased by 15%. Now I want you to go find the room number. They're going to tell you. So when they tell you how many millions they made per room, so they're going to say, look, RevPAR is up 15%. We made, RevPAR means, we talked about that already. When they say RevPAR is up 15%, boom, we made such and such millions. Altogether, I want you to go divide the millions by the rooms to get an exact number. Now what we're going to do is, because they said by the end of the year, they can go up another 10%. So we like to hold companies to their word. If they can go up another 10%, we got to see what the numbers is now. We got to make sure the math is mathing. Watch this. RevPAR grew by 15% globally. RevPAR grew by 5% in the US. Yo, we on fire tonight. All right, let's go a little further. In case you don't understand, here is all the hotels that Wyndham owned. Wyndham Grand, Ramada. Oh, I used to trap out of Ramada. No. We already behind time, yeah. Hotel Super 8, oh my God. I had Days Inn, Travel Lodge, Howard Johnson. Listen, you gotta be old school to know about Howard Johnson, y'all. Like, listen, I'm telling you. Yo, I trapped, I didn't know that was a damn. Man, what? A Ramada and a Days Inn? I'm looking for. I just like, if you know, you know. If you don't know, you in the comments saying, what are you talking about? Don't even worry about it, fam. The La Quinta, I ain't lying. Listen, the La Quintas be peach. It's a peach-looking building with a green top. You can't miss me with it. Man. All right. This is why I need Donnie and G. They saw it. They saw it brewing. They saw it brewing. It was about to. We got children looking. Okay, we not gonna even do it. All right. Let's go a little further, man. All right, so watch this. So I listened to the CEO and he said something. He said global revenue is up per available room by 20% year over year, which means in the month RevPAR is up. Then he said this. Development pipeline is up 12%. 170 new construction projects in the making. So that's going to put them at 1 million. That's going to put them at about 1 million. So here's the thing that got me, though. They increased the dividend by 9%. So here's the thing that got me, y'all. Watch this. If inflation is up everywhere, see, this is what we talked about in the beginning. We talked about the audacity to choose wealth. Inflation is up in everything. Listen, these rooms are up. They not cheap. They up. That means people are spending money. So here's my thing. If the people who are spending money to stay in these hotels, the only way he can increase the dividend, he's saying RevPAR is up, which means rooms are up. The people who live in check to check spending unnecessary money staying in these rooms. Because guess what? He said in the call, it's not business travel that's up, it's leisure travel that's up. Now, I want you to see something. Go back for a second right quick, Dave. I want you to see something. And I'm going to just be completely honest right here, and I'm not judging nobody. But I can promise you nobody in the 1% ain't staying at none of them hotels. Nobody in the 1% ain't staying in the Days Inn. Nobody in the 1% ain't staying in a Travel Lodge. Nobody in the 1% ain't staying at a goddamn Ramada. I can promise you that. I can promise you that. You're going to catch bed bugs. Ask me how I know. So the people who staying here at the Baymont Suites and Inn, the people who staying here, they probably got one of them, the Wyndham Grand. That's probably the only one that's mid-tier. I can promise you, the people who live in check to check staying here. The people who complain about building wealth, they staying at the Wyndham. The Wyndham is up right now 17% on the year. Leisure travel is up. Not business, leisure. Leisure. Watch me go a little further. Let's go a little further. Because we killed this one. I did some homework. I said, okay, if Wyndham is doing this, let me go check something else. And guess what I looked at? Marriott. Guess what I found out? Marriott stock last week jumped. But guess what? Earnings exploded by 33%. Look at this. Rooms are 13% higher, and business travel is down. Leisure travel is up. The company is 90% back to pre-pandemic levels. They back to pre-pandemic levels. Let's go a little further. Look at this. RevPAR is up 5% above what it was in 2019. What is RevPAR, y'all? The revenue that is generated per room, whether it's occupied or not. It's a whole lot of leisure going on with the economy and the way it's in. It's a whole lot. So here's what I understand that's going on. People are under so much financial pressure, they're willing to spend money they don't have to escape. You know you don't got the money to take that trip. That money could be used to invest, yo. You got to understand that in times like this is when the wealthy increase their wealth times 3. Let me give you a fact check. Let me give you a number. Since 2019, the wealthy 1% of America has increased their wealth by $5 trillion. They just flamed all our ass. since 2019. Know what that means? Since the pandemic started, since we got into this phase over the last 3 years, guess what they've been doing? Going buy more assets. Leveraging money. Buying real estate. Taking advantage of opportunities. They're not trying to save. They're trying to go buy more. So if you're working a job and you like, yo, Trap, I'm working 2 jobs. Guess what? I'm not mad at you. I'm telling you this. That need to be money you need to be investing with. You got to figure it out. Because it ain't going to be given to you. Freedom ain't never been free. It's the most expensive thing you will ever buy. It's going to cost you the most. You think that man went and built 170 more hotels because he see people ain't spending money? A hotel ain't cheap to build. But he know one thing. He understanding what people doing. He putting that money to work. We got to have the audacity to choose wealth, y'all. A bold move. You got to be willing to risk something. How you going to get what you ain't never had thinking the same way? It ain't going to happen. You still thinking your job going to take care of you in retirement. It ain't going to happen. You still thinking the 401k is the best investment you can make. It ain't going to happen. Because in order to get that 39% that you lost, you probably got to work another 30 years. The goal of Trappin Tuesdays is to help you attain freedom, man. You come in each and every Tuesday, man. We on 31 episodes. I guarantee you, 31 episodes, if you pay attention to all 31 episodes and you ain't come here to just get entertained, you came here to learn, yo, this is better than any course you can ever take. Another one. How you feel? You all right? You see Donnie? How much we get started for Donnie? At least 1997. And we just talking about a segment. We ain't even talking about a whole, you feel me? All right, let's go a little further, man. And I just dug a little deeper. Because in my mind, I know there's the people that won't play Airbnb. I said, they got some people that really love Airbnb. Let's talk about them too. Here's what we found out. Airbnb just posted its first annual profit. Its first profitable year. 2022 was Airbnb's first profitable year. They had $1.9 billion in profit in 2022 after losing $352 million the quarter before. Watch this. This what blew my mind. The strong travel demand on their bookings were for people who stayed 28 days or longer. It represented 21% of revenue. So people get into Airbnb just like, yo, I got it for the month. Watch this. They added another 900,000 listings, giving them a total of 6.6 million listings and growing. So what do we see, y'all? We saw Marriott up. We saw Wyndham Resorts up. We saw Airbnb up. Watch this. Airbnb is up 54% on the year. Marriott up 14% on the year. Wyndham Resorts up 17% on the year. People are traveling. And everybody said the same thing. It ain't business, it's leisure. It ain't business travel, it's leisure travel. Because the economy got people so pressed, they're willing to spend money. So watch this. Watch this. Here's how I understand the economics. Here's how I understand the environment. I can almost guarantee you Visa, MasterCard, American Express are also up this year. Why? Because people are spending money they don't have. What's the easiest way to spend some money that you don't have? Charge it. I just gave you a whole triple double. You want to let that one just sizzle, Jose. That one had to just sizzle out. That one had to just sizzle out. All right, man, let's go a little further, man. Oh, before we go further, let me show something. Just in case I want to give you another alley-oop, just in case you didn't want to invest in any one of those stocks because this is not investment advice, I will tell you go invest in the ETF, Beds ETF, or the Away ETF. Guess what? Both of them are up on the year, 11.37%, 12.5%. I'm gonna dig a little bit deeper for you. Watch this. The money sitting in your savings account is getting 0.01%. The S&P 500 on average gives you 7 to 8% on the year. These two ETFs alone have already beat the market. They've given you a year's worth of returns in a month and a half. 10 stocks, 8 stocks, and 1 ETF. You don't need 50. I'm going to do something a little better for you. If you're in the Triple Beam team, or if you're in Trap, Masters of the Triple Beam, or even if you in Lottery Pick, nope, I ain't gonna do that. I gotta give my people something. If you're in Trappers Anonymous, ETF Thursday, I'm giving you 2 other ETFs that I like that go with these. There you go. That way I get him a gem. I'll give you a gem. If you're because I don't be showing my Trappers, I be showing them love, but we got a Thursday, what we call ticker ETF Thursdays. So if you're in Trappers Anonymous, I got you for 2 more ETFs that I really like. They up 20%. I'm going to give it to you. Listen, I got to spread the love. I got to let my Trappers know. And this Sunday, we had a dope live from the kitchen in Trappers Anonymous. 2 hours. We banged out. So if you're in Trappers Anonymous, you know we got the live from the kitchen. Also, I'm getting the TV up in the studio, so we about to start back doing our opening bell and closing bells in Trappers Anonymous, where I get on there and we talk about what's going on. How do you get a part of the Triple Beam team? Let's put the link in there for the Triple Beam team. Let's also put the link in there for Trappers Anonymous, man. Let's go. Let's go a little further, man. How y'all feel tonight? Let me know in the chat. In the chat, tell me how you feel, man. Like this, subscribe, but also click the bell. Hey, yo, check this out right quick. We got 1,700 people in the chat. We got 754 likes. Don't get me wrong. I love the likes. Let's get the likes up to 800, man. We're going to go to a commercial right quick, and let's get the likes up to 800. Let's get the likes up to 800.
What's good, Trappers, man? It's your boy, the Wallstreet Trapper. Right now, I want to invite you to an amazing experience full of value. That is my community, Trappers Anonymous. It's 100% the greatest fundamental investing community on the market. Listen, your portfolio should be a masterpiece. And the only way we get you there is if we help you to learn how to invest with confidence. Now listen, I get it. Like you don't know a lot about stocks, or maybe you've heard people say how much money they lost in stocks, but I can guarantee you, 1, because they weren't in the community, and 2, they lack the information. Our goal in Trappers Anonymous is to help you, really to hold your hand on the journey to becoming a confident investor, learning how to navigate through the different events that the stock market goes through, to bring your temperament down, to take you from panic to encouragement. So listen, man, come join us in Trappers Anonymous. The link is below. Listen, if you want to be helped, if you want to truly make money in the stock market, if you truly want to let your money work harder for you than you've worked for it, there's no better time than now. This is an opportunity only for those who are willing to be on the journey. So listen, man, click the link below. Come join me in Trappers Anonymous, man. I will see you in one of our many classes, whether it's Moat Monday, whether it's the 2-hour class we do on Sunday, or whether it's just a book club. Everything is geared toward making you a better investor so you can triple your net worth and turn your last name to an asset. It's your boy, Wallstreet Trapper. See you in the trap.
Hey man, so right quick before we go any further, man, hit the bell. I want to say y'all showed up just now, man. We went on a commercial, we had 700 likes. Y'all got that thing up to 898. Can we get 1,000 before the show is over? That's all. Thank y'all. All right, so right now we're going to break down growth stocks, stocks that are expected to increase in profits or revenue faster than the average, right? So when you're creating your portfolio, you can do the 80-20 rule. We like that, but I want you to have a portion of the portfolio that's for growth. So if you don't have a specific growth portfolio, I want you to have a portion of your portfolio that's specifically for growth, right? So let's say you got a portfolio and you got 10 stocks in it. Well, let's do 7 growth stocks, 7 strong stocks, 3 growth stocks, but then let one of the growth stocks be in your top 3. That way you can move your portfolio a certain way. God damn. I came out of the break on fire. I came out of the break on fire. All right, let's go a little further. Right, so now I'm going to break it down to you. Let's look at growth stocks, right? 1, they got to have a competitive edge. They got to have that. So if it's a growth stock, what is the competitive advantage that it's having? Right, so let's think about a car. So let's look at Tesla, right? So let's look at Tesla compared to the other Teslas, right? Also, Elon said that by 2024, he's going to lease out 7,500 charging stations that all EV vehicles can use. Did I say that right? Did I say EV vehicles? I don't know why they came out wrong. Vehicles, all right? Next thing I want you to do is this. I want you to have a loyal customer base. If it don't have a loyal base, then what we doing? Next one. Growth stocks typically do not pay dividends because they want to put the money back inside of the company. All right, number 4, they will look expensive. PE ratios on growth stocks are going to be out of this world. This is why it's a good time to buy them now, because they're actually getting cheaper. PE ratios on growth stocks will look extremely expensive because the market is connecting the growth to what it can do in the future. Remember, the stock market is a what? Forward-looking mechanism. Y'all don't be listening, man. All right, cool. And lastly, market prices are often more volatile in growth stocks than they are regular prices. Here's the thing. In a lot of growth stocks, you're going to look at the beta. The beta on a growth stock is going to always be over 1. Remember, stocks with betas over 1 are volatile. Stocks with betas under 1 are less volatile. I'm just flaming tonight. God damn. I'm on fire tonight. We got some clips this week on YouTube, boy. Hey, make sure y'all press that bell so we can know. Make sure y'all press the bell so y'all can lock in. Hey, let me say something right quick, man. Each and every Thursday, man, hey, I need y'all to go listen to the audio experience. The audio experience comes out on all podcast networks. Apple, Google, Spotify. Apple's, Google, Spotify, and all the other ones. Go to them, click the link, download the doggone audio, and listen to it Thursday. We got another one we drop on Friday. We got another one we drop on Saturday. We got another one we drop on Monday. We flooding the streets. So I need you to go download the audio experience. Also, thank you, Jesse Shorts. He said, get the Wall Street Trappin course. It is a game changer for real. I'm going to be real short. Y'all think I be cooking up on this stage? That Wall Street Trappin course is like, it's a game changer. Oh, shout out to everybody. Jose, let's have a stop. We got 1,000 likes, man. My goal at the end of this show is to have a lot of people that will no longer say this.
I'm in a bind, Nate.
Some other time.
I really need this.
We're not going back to this. We're not going back. We are getting the people out of the binds. Let's go a little further, man. All right, let's go a little further. So, watch this, man. Betting big on DraftKings, man. Watch this, y'all. I'm not going to be real. This is crazy. $800 million in revenue. DraftKings, $800 million in revenue. That's a new record after hitting $500 million in revenue the quarter before. Here's what killed me. They are expected to end the year with $700 million in cash on hand. And they're also generating positive earnings by the year 2024. So they mean they expected to have positive earnings by 2024. Watch this, y'all. This is crazy now. This is crazy. The revenue grew by 81%. 81%. Golly. Them people is gambling. Revenue grew by 81%, and they said they are increasing the mid-year guidance. So watch this. The only way that a company, so this is why DraftKings went crazy too. The only way a company can increase mid-year guidance, listen, we got some of the greatest companies in America right now saying, yo, we're not even giving up guidance for 2023. We're not giving up no guidance to 2024. Then people came out in Q1 and said, yo, check this out. By the middle of the year, we increasing guidance from $2.9 billion to $2.95 billion, almost $3 billion. Okay, I wrote down some notes that I want you to write down. Get your pen and your pad. I want you to write this down. I want you to write this down. I want you to write this down. Let me know in the chat when you get your pen and your pad. This is the other part of Trappin with Taya. Jose, you know what we're going to go buy? We're going to go buy some pens, and we're going to buy some notebooks, and we're going to start, George, you can handle that? We'll start shipping that out. Shout out to George, man. Shout out to George and Keisha, man. They've been shipping out the packs, man. You've been shipping out the packs, man. You've been shipping out they've been wrapping them up. Shout out to my baby girl, because she shipped out a couple packs, too. Don't worry about it, babe. All right. So write this down, y'all. I always try to get y'all, because I want you to know how to look these companies up, man. I want you to know how to look these companies up. So when you're looking at a company like DraftKings or, what's the other company? DraftKings. Give me the other company, Oshan. What's the other company? DraftKings and FanDuel. FanDuel. So when you're looking at these companies, this is what you want to look at. And casinos. You want to look up MUP. Monthly unique players. Monthly unique players. That is the people that are, that's what they call their people. The unique players. Right? They don't just call them gamblers. They're unique players. It just is what it is. So we look at that. So their monthly unique players increased to 2.6 million. MUP. Watch this. The average revenue, which is something you need to look up, is called ARP. MUP. Okay, just take it slow. ARP MUP. You got me, King. I wish we could just see that King is right. If you're going to come, in April, the live shows are coming to effect. We got the stage getting done. We just put new carpet all the way in. We got DSD doing the bathrooms up, so we're going to have the marble epoxy floors. 65 people per live show. We're doing 2 live shows a month. If you're in the Triple Beam team or if you're in Masters of the Triple Beam, you will get a discount. I'm going to just tell y'all right now, live show going to be $97. Yeah. Donnie like that price.
No, it could be more. Is that the discount?
No. That's the regular price. She don't like that price.
Giving away all this game.
When Donnie hit me with the, okay, I know it's a problem. That, okay. See that K, that, okay. That means I need to talk to you about that. Am I lying? I am not. I've been knowing her long enough. So that's what we're going to charge, man. So I'm telling y'all right now, man, it's $97. We're going to have 65 slots. I'm going to post a calendar. I'm going to say, hey, here's the 2 shows we're doing this week. This month. We're going to do 2 live shows a month. $97. You'll come in. You'll get the full experience to watch the show, Q&A. May do some Q&A from the audience. May have some food. You also have access to the merch exclusive because some of the colors not even much going to be out. But if you're in Masters of the Triple Beam, or if you're in the Triple Beam team, you're actually going to get a discount. All right, so let's get back to it. ARP MUP, which is average revenue per monthly unique player. Average revenue per monthly unique player. So their average, here's the numbers, DraftKings average was $109. Here's how you do the math, y'all. Simple math. They got 206 million users that on average are spending $109. That $109 is an increase of 42%. DraftKings said we can potentially see another 15% increase by year's end. Yo, we cooking tonight, man. Listen, watch this. Did you know? Go back a little bit one day. Did you know that Disney owns 6% of DraftKings? Jose, that need to be a part of the clip. That's going to send the internet crazy because them people that think Disney is friendly, they think Mickey Mouse is friendly, they think Cinderella is friendly, they think the Smurfs is friendly. The whole while they backdoor gambling. They got a parlay in. The whole way Mickey got a parlay in. The whole while Mickey took Kansas City giving up 2. The whole while. Man, I ain't playing with Mickey, man. But Mickey Mouse owns 6% of DraftKings, man. That blew my mind. Watch this, though. The stock is up 43. No. This stock is up 80% on the year. DraftKings is up 80% on the year, y'all. I'm going to tell y'all right now. When that market go back to that 17 and 18%, I might be looking at a DraftKings option, dog. I just get out of the way free. Jose. When that market get back to that 17 to 18% VIX, I might be putting off a DraftKings options. And here's why I'm going to tell you why. Watch what I'm about to tell you why. DraftKings is in 20 states right now. That's 42% of the United States. iGaming is in 5%. That represents 11% of the United States. But watch this. Massachusetts and Puerto Rico have just authorized sports betting. So that added another 2 states. Watch this. In 2023, another 11 states have collectively introduced gaming and betting to the legislation. So that will put them from 20 to 30 and counting. Well, the one thing I know about politicians is if they can find a way to make some money, they're going to make some money. And guess what? They're going to make some money by allowing you to gamble in their state. Let's go a little further. Check this out. Who have DraftKings partnered with? DraftKings has partnered with the NFL, the NBA, the Major League Baseball, hockey, the rich-ass people that play golf, UFC, and the NASCAR. Everybody wants some money. I had to let that one sizzle. So all I'm going to tell you is this. We just gave you the numbers. We just told you that monthly unique players have increased to 2.6 million for DraftKings. We just told you that average revenue per monthly unique player is at $109. So that's telling us 2.6 million people are at least spending $109. What happens if that person is betting on football, baseball, hockey, the MLB, pitch to the line, NASCAR, UFC got something on every other day. We also said that 5 states are in gaming. Then we said another Puerto Rico and Massachusetts had entered the chat. And we also said another 10 states have now put up bids to add gaming to their playbook. DraftKings is printing money, man. Mickey Mouse, I'm on to your ass. I got your ass now. All right, let's go a little further, man. And here we go. Check it out. U.S. gaming revenue. Watch this. Online gambling in 2022 hit $60 billion. At the top. That's everything. This is everything. So online gambling hit $5 billion. Sports betting hit $7.5 billion. Casinos hit $47.8 billion. That means, watch this, y'all. The same people that's living check to check. Same people that's complaining, guess what they doing? They going to stay at the Days Inn, the Travel Lodge, the La Quinta, and they in them casinos. You got to have the audacity to build wealth. So you thinking these little couple things ain't working. Your financial wins are a byproduct of your financial habits.
I'm in a bind, Nate.
I double time,
Some other time.
I'm getting good with the board. Jose, I hit him with the. You heard me? Your financial wins are predicated on the financial habits that you have. You can tell a lot about a person by the habits they got financially. What are the financial habits? What are you cool with spending money on? What are you cool with spending money on? Me, I'm not going to lie. My COO, and Donnie in here right now, my favorite thing to say is, I ain't paying that. I ain't paying for that. That's my favorite. Man, I'm not paying for that. If it's not for this building, my house or my daughter, man, I'm not spending that money. I wear this every day. Why? Because it's easy for me. It don't take no thinking. It don't take no thinking for me to put this on. I understand now why Mark Zuckerberg's favorite uniform was a white t-shirt and some jeans. It's easier to put, man, let me just throw this on right quick and go about my business, man. I ain't trying to get fresh for the gram. And nothing against nobody that's doing it. But what I'm saying is, because you can be wealthy and, do your thing. But I'm talking about the people who not where they want to be financially, and they got more in their closet than what they got in their investment account. I'm talking about the people who not where they want to be financially, and they got more in their closet under their bed than they got in the bank account. I'm talking about the people who not where they want to be financially, and you scared to buy a course because you think somebody's scamming you, but after you wear the shoes 2 or 3 times, you don't even want to look at them no more. I'm talking about you got a closet full of stuff talking about I don't got nothing to wear. I'm talking about them people. I'm talking about the people that can't miss a party. I'm talking about the people that saw the, and nothing against Beyonce. You saw the Beyonce tell you like, bet I'm going to get that. But when somebody tell you, yo, this is an investment opportunity, you got to think twice about it. You feel me? I'm talking about them people. This is the time for us to be quadrupling down on buying assets. I don't care if the stock market plummeted. Guess what you need to be doing? Price points. Buying every time it go down. Because you know one thing, in 2024, 2025, that thing gonna be running, and you're gonna be done quadruple your net worth. That's where you need to be at. This is the type of mindset shift that you gotta have. And if you ain't got that type of mindset shift, I'm gonna keep it real with you, yo. You ain't ready. You gotta be conditioned. It took the Israelites 40 years to take an 11-day journey. It wasn't about the destination. They had to get conditioned. They had to understand where they was going. You can leave slavery and still be in love with some of the things in that condition. The people knew they wanted freedom when they was in slavery, but guess what? Master gave them a for sure meal. When you got to go out there and run through them woods, ain't nothing promised. You fear that. You fear the unknown. When you got some people that embrace the unknown. You got some people that live in the unknown. You got some people that understand once I get past the unknown, the wealth becomes familiar. I need the unknown to become familiar. I need to know what it's like to wake up every day to $1 million. Familiar. You need to know what it's like every day to wake up to freedom. Familiar. What it's like to not go to a boss. What it's like to know your retirement is secure because you put in the right investments. Familiar. Audacity. You got to have the audacity to build wealth. You too comfortable with living check to check. You too comfortable with being in poverty. You too comfortable swiping that credit card, knowing you ain't got the damn money. You too comfortable doing that, and then you want to complain. You want to get in a group chat and complain to the same people who doing the same stuff that you doing. Y'all all got the same financial habit. That shit is problematic. I don't care if you come here every day and listen to me, yo. If you ain't taking action, yo, you wasting my time and your time. I can promise you my daughter love rocking with me, yo. I'm making a sacrifice because I said I want to help my people transition because I see how the game being played. I ain't doing it just, I do it because I love it. I do it because I can watch the stock market every day like your boyfriend watch Sports Center. I ain't never got to change my channel. I promise you that. Because I'm watching the people move the chess pieces every day. And while they moving the chess pieces, you sitting comfortable. This is a game we don't just need to learn how to play. This is a game we can master. I just flamed your ass again. I just went into the zone right quick. Okay, Tootie for the chorus. Oh, that what I need. Jose, Donna said we need a shots fired. That's coming. All right, let's go, man. Let's go a little further. Tootie gonna be mad tonight, y'all. We at 9 o'clock and I ain't even much in. Sheesh. Jose loving it. He like, watch time. Y'all all right over there? All right, cool. All right, so here's a sweet play for us that I like, man. It's called machine learning. I think it's a sweet play while everybody's looking at AI. I truly believe that machine learning is a little bit better. Here's why. Machine learning helps computers emulate how humans learn and adapt by using data and experiences. Right? IBM created the machine learning concept with a scientist by the name of Arthur Samuel. IBM was the one that created the idea of machine learning. He created the idea. So I think machine learning is actually a sweet play for us to get. All right, let's go a little further. So I'm gonna give out some plays. I don't mind. Wait up. We ain't do something tonight, Jose. Man, we got to get a triple beam team their questions. We got to get a triple beam team their questions. We supposed to do 2 and 2. All right, but we supposed to do 2 in the beginning. That's okay. We good. All right, so check it out. I like Tesla. Why? Because of machine learning. They are understanding how to play us in, from the car space. Machine learning, the car learning the road, learning to drive. I think machine learning, Tesla leading that industry. Machine learning, GPUs, NVIDIA, top notch. You can't beat them. Machine learning. Watch this, y'all. This is a company that I own. I'm going to be real with you. I'm down. I've been averaging into this stock for a while, and I bought it at a discount. Accenture, ACN. Companies go to this company to develop machine learning researchers. That makes sense? So the people who research machine learning, it's hard for a company, you can't just go out and find somebody that do machine learning. So you go to this company and they actually are the division, they the big dogs of machine learning. I love this company. I own it. I'm not gonna lie, it's getting whooped. They've been getting whooped for this year. But it's also married to fintech. It's also married to fintech because they operate in the same way. I love this company, ACN. ServiceNow, another company I love. This company, Bill McDermott, one of my favorite CEOs. He got white hair with some black glasses. He cool as the other side of the pillow as my guy. Damn, what my guy name is, man? What's his name, man? Black dude, passed away, man, from cancer, man. From Sports Center, man. Stewart, man. Stewart, man. Cool as the other side of the pillow, man. Stewart. So ServiceNow, machine learning, it helps businesses. So ServiceNow helps businesses with machine learning. Also Palantir, machine learning that helps businesses unlock data. I'm not telling you to invest in any of these, but I'm telling you machine learning, AI needs machine learning. Just like crypto needs blockchain, AI needs machine learning. Machine learning, machine learning, machine learning. All right, yep, it was on the fintech class. Shout out to everybody who's in the fintech class. I've been owning this stock for a while. Let's go a little further, man. All right.
Come on, I'm broke, baby. I ain't got no money. Bull. I see you shining, and I can smell them.
Ooh, can't say that last word. It's clean. Shout out to Jose for making sure we stay monetized. All right, so I want to break this down to y'all, man. I want to break this down to y'all, and this one kind of like ugly. So I want us to tap in right quick. I want us to get real. I want us to lock in. This is important. Of course, we live in America, but all of us only know the America that's a superpower. I'm 40 years old right now. Thank you. I'm 40. Before I leave this earth, we will see America that will not be the superpower. The writings are on the wall. Ray Dalio, you should read that book. In order for a company to stay on top, it must have money. It must be technologically advanced. And it must have a great military. The United States of America has a great military. But they're not leading the lead. They're not leading the game in technology. And they have more debt than 3 countries combined. They have more debt than 3 countries combined. Here's what I want us to understand. Watch this. The United States, the national debt limit has increased by $8 trillion since 2020. So from 2020 to now, the United States has took on another $8 trillion in debt. The last time the United States had more income than debt was in 2021. The reason why they have a debt ceiling is because you can only borrow so much money per year. You can only borrow so much money. Well, I'm not going to say in a certain time span, you can only borrow so much money. The way that the United States pays that is what they do is they create T-bills and treasury bills and bonds. They create these things. They issue these out. $60 billion of debt is due by July. Guess what? They don't have it. They don't have it. So now they want to increase the debt ceiling. $800 billion is due by the end of this decade, which is by 2030. I want you to understand that when they can't pay the debt, certain things got to go. Social Security makes up 22% of debt. Remember, we talked to y'all about this 2 weeks ago. One of the things that they've been debating about, and I'm not going to lie, Joe Biden has been fighting for it, is to not cut Social Security. Republicans is like, yo, they got to go. They got to go. Republicans are saying they got to go. I'm not a Joe Biden fan. Y'all know I think he's full of crap. But he has been fighting for that. Medicare makes up 38% of the national debt. Remember what we talked about, y'all? Medicaid and Medicare is the biggest part of the national debt. They're 100% going to cut that. Because they say within the next 2 years, Medicaid will go up to 42% and Social Security will go up to 28%. National defense, it only makes up 13%. Another 13% equals in just interest payments. And the rest of it is up in other. Here's what I want us to understand, y'all. This is one of the reasons why you got to stop living check to check. This is one of the reasons why you got to get your finances in order. I'm not telling you to stop working a job, but what you need to learn how to do is invest. And you need to invest as much as you can. Not only will they be cutting Medicaid, not only will they be cutting Social Security, it's because they don't have an option. They don't have an option. America after the Revolutionary War, America went in debt $75 million. They ain't stopped going in debt since. And the next thing the smartest person in America try to do was say, you know what? We don't need to be backed by gold. The Bretton Woods Agreement. We don't need to be backed by gold. Just let us print money how we want to. And then greed took over. Because the one thing we know that every human being will learn how to do is spend some money when they got free access to it. And then the credit card came about. Now we can spend money we don't have. And if you go read the book, The Creature from Jekyll Island, you'll understand how the Federal Reserve came about. And then you'll realize that the Federal Reserve is not even a part of a government. It's an individual entity of 6 families that now makes a profit. They get dividends for every dollar that America make. I need you to understand that this game is played different. And as long as you playing a game from being a pawn, you're going to always be sacrificed. You need to graduate. You need to graduate to a bishop, a rook, a knight, a queen. You need to graduate because you got to learn how to move different. Because if you don't learn how to move different, if you keep on playing the game the way you've been playing it, and then you teach your children how to play the game the same way you've been playing it, and then they teach their children the same way they've been playing it, what happens? You have a family that has now inherited generational poverty, generational scarcity mindset, generational lack of opportunities. You had an opportunity right now to change that. And if you don't change it, I want you to take a good look at the people that came before you in your family bloodline and look at the people that's coming after you and ask yourself this question: when will the next me come about? When will the next person that's willing to sit down and watch Trappin Tuesdays for 2 hours come about? When will the next person that come around that's willing to read investment books and mindset books and personal development books and books on taxes and books on life insurance? When is the next me going to come about? And if you can't confidently say it's in the next generation, that means you need to start now. I always like to say that in my mind, when I create the family SOPs, every generation is responsible for the next 2. Don't be the Vanderbilts. The man who was once the most powerful and richest man in the world, and now you don't even hear their name talked about when you hear about the Rothschilds and all these other wealthy families. You know why? Because after he died, the family just blew through the money. Don't be that. You have an opportunity. These things come around every 14 years, every 10 years. Get the experience now. Play the game now. What you don't know is not a reason for you not to do it. A lot of things I ain't know how to do, but now I walk through them with confidence now because I needed to get the experience. I needed to get the war wounds. I needed that. I needed that. Because experience is our best teacher. And if you not knowing is going to always be the excuse for you not doing it, then that means every person on your bloodline going to have the same goddamn excuse. And so now you're going to look at other families going up. I'm looking at Sam Walton. I'm pretty sure Sam ain't know how to run a multi-billion-dollar business, but guess what? His grandkids learned how to do it. His kids learned how to do it. His nieces and nephews learned how to do it. And so now 5 of them in the Forbes top richest people. I need us to understand that, man. And so let's go on a little one more, slave. Here it is right here. I want you to just look at this, y'all, and put it on the screen so they can see it, Dave. Here's the revenue. Budget by fiscal year. The U.S. has run an annual deficit for most of its history. It hasn't paid down its debt since 1835. It hasn't paid down a debt since 1835. The last time the nation bought in more money than it spent was 2001. 2001. This is revenue at the top. This is expenses at the bottom and a deficit. How do we get the GDP? That's the money we bring in from trading. America is a what? Service-based economy. It's a service-based economy. Look at it. In 1990, the government receipts grew faster than the spending. The Balancing Budgeting Act of 1997. I need you to write them things down. What is the Balancing Budgeting Act? You need to write that down so you can learn that. In order to win in this country, you got to know the history of the country. In order to really attain wealth, you got to understand the history of building wealth. Look at it right here. 1999, 2000, 2001, 2 trillion. We hit the 2 trillion. 2 trillion in 2007, 2008, 2009. 2 trillion in good, almost 4 trillion. It got deeper. In the next one, 2010, 2011, you see it, corporate income tax. You see it hit 6 trillion. A lot of y'all gonna be just like America. Y'all make $100, but you spending $250. This is where you get the bad habits from. You get the bad spending habits from the country you're living in. Oh, goddamn, that was good. Goddamn, that one came out spicy. That's where you get the bad habits from. The difference is they the ones printing the money. So they making the rules as they go. You don't have that luxury. Let's go a little further, man. And here we go. The USDebtClock.org. As of 6 o'clock, 3 trillion. I need y'all to see this. 3,576,150,583. Yo, I'm surprised at myself that I can say that. That's a big ass number. Damn. But watch this. The GDP right here is 26 trillion. The national debt is 31 trillion. Here's what I want you to really look at. Watch this. If they broke the national debt down per citizen, each and every person owned $94,000. Watch this. Watch how I get a little more deeper. So if we talk about America, right now alone, they saying my daughter owed them $94,000. If they broke this down per citizen. Let's go a little further. Let's go a little further. If you a taxpayer, entrepreneur, got a job, you owe them $246,000 because you're a taxpayer. Because you're a taxpayer, you owe them $246,000. Guess what? The working man always gets taxed a little bit more than the entrepreneur. The working man and woman always gonna get taxed a little bit more than the person who got that small business. The working man gonna always get taxed more than the farmer. So what I tell y'all each and every week, go buy you a land. I don't care if it's a plot of land. I don't care what it is. Go buy you some land just to get the tax benefits. If it's a small thing of land, go put some chickens on it. It's a whole different write-off. Go get your acre of land, put you a cow on it. Invest more than you spend. Invest more than you save. I'm about to say something that's going to hurt people's heart. Saving money is a broke man game. Let that sizzle. All right, cool. Let's go, man. We good, man. So right now, man, we got some questions, man, from my trappers, man. It's called 1-800-TRAPPER hotline, man. First of all, man, thank y'all for tapping in tonight, man. We've been heavy. I know we going over tonight, man. We're a little heavy. It's all right. It's all right. Shout out to Zay. Shout out to Tony. Shout out to Khadijah. Shout out to Rice. Shout out to Buzz. Shout out to DJ Ness. Shout out to Tori. I see you, Queen. Robert Wilkins. Shout out, family. Listen, man, if y'all feel like y'all getting y'all worth tonight, man, put it in the chat. Each and every Tuesday, man, we coming with heat, man. So, man, bring your people. All right, so let's go, man. Or if you're in Trap, Masters, blah. If you're in Triple Beam Team or Masters of the Trap, we working on an audio. It's coming. Jose wanted to do it today, but I said, nope, it ain't 100. We wanted to be clear and precise. So, Professor the GOAT, 1-800-TRAP. Professor the GOAT said, what's going on, Trap? I've been in the market for a year and some change now. Where do I start as far as research to really get an understanding of the market and looking for great companies? First, I'm going to give you a shameless plug and say you need to get the Wall Street Trapping course. That way you can learn all the things you need to learn. But second of all, what I'm going to say is this. When it comes to researching companies and looking at companies, one of the things I'll say is get an ETF. Write it down so I can always have it. Get an ETF. So go look at the ETFs for every sector. Go get an ETF and then find the 2 sectors of the market that you like the most. So you know they got 11 sectors in the market, right? So find what sector that you like the most. So once you find a sector that you like the most, what you now go do is go inside of that ETF and look at the companies inside the ETF. Why? Because the ETF has already did the hard work for you. They're not really going to put the trash companies in the ETF. So the first thing you do is go get the ETF that you like. So whether it's so go get like the QQQ, go get the SPY, or XLK, XLV. There's 11 sectors in the market. Go get that. But then once you get that, go look inside the ETF. Go to Yahoo Finance, put the ETF in, then go to Holdings. Once you go to Holdings, you'll see all the top 10 companies. Look inside those top 10 companies and then pick 3 companies out of that and go research those companies. How do you research it? First, you want to look at just out the blue without going too in-depth. Balance sheet, go look at the finances, go figure out how the business make money. That's what you go look at. How the business make money, look at that. How the business make money, who are their consumer, how much money they got. How much money they got, looking at how much debt they have, how much income they have, and go see can they pay off their current bills. You go look at those 5 things, it'll help you out a lot, brother. I hope that gave you some game. I just flamed it. But if you want to go a little further, man, go get the Wall Street Trapping course, man. You hear me? It's a full breakdown. It shows you how to use the 200-day moving average, how to use moving averages. It just gives you the whole breakdown. You take it at your own pace. And I got something I'm cooking up for y'all, too. Just put this in y'all head. Wall Street looks like Us Now University. Put that in your head. Put that in your head. It's going to be insane. Next, Is it Dylan or Dalen? I hope I say it right. Shout to you, family. So he says, me and my family mindset on money has changed completely, and we are making great gains, being patient and purposeful. I just read that Robinhood is offering a 4.15% APY, which is like a savings account, every 30 days for uninvested cash. Do you think that would be a good place to put some of my tax return to earn money on top, or should I just keep adding to the companies I'm already invested in? Thanks, King. Okay, here's what I'll say about that. First thing I would do is I will wait a minute. So because I'm not a fan of Robinhood, but I don't want to be biased. Right? I'm not a fan of it, but I also won't be biased. So the first thing I'll do is, just because they enrolled it, what I would do is I will watch them first to see, I will do the research on it. Why? Because even when somebody rolls something out, there's still going to be kinks in it. There's still going to be bugs, still going to be things you got to fix. So I will watch that first. But also, I want you to answer this question. Robinhood doesn't have good financials. So because they don't have good financials, where's that 4.15% coming from? That's the question we got to ask ourselves. Because Robinhood doesn't have good financials, where are they getting the 4.15% to give you? You need to understand where they're giving that from. If you can understand where they're getting that money from, then it gives you a little more clarity, right? So we know that they've got different business modules, but if they not profitable, it's kind of like me. I don't like investing in companies that pay dividends if the company not profitable. Right? So if they're not profitable, then where the hell are they getting 4.5% to give you every month? Where are they getting it from? I need to know. So we need to know that. Because we know they're doing payment for order flow. That's cool. Like they increasing the spread between people trading. That's cool. But even doing that, they not profitable yet. So where they getting that from? So I'm not gonna say yes to that. I'm gonna flush that. I'm gonna flush that one. Yeah, I'm gonna flush that one. I ain't gonna ride you on that. All right, man. So the next one, those are my two questions for that. We got two more to go on trip. Right, this next segment is called Learning Lingo. So what Learning Lingo is strictly about me breaking down the jargon, breaking down the language that is used that keeps a lot of us out of the game. Today's Learning Lingo is none other than cost basis. The price you pay to purchase the security, including purchases made by reinvesting dividends or capital gains distribution. All right, Jose, can we get this right here for a second one more time? Or we unplugged it? I think if I show y'all this, it's easy. That's why y'all should have never let me buy this board. I just need you to get your, so basically cost basis is what you pay, what's the average price you paid for a stock over time. So even if you averaging down or you averaging up, cost basis tells us what we're paying for the stock. I think it's easier for me to show y'all from here than it would be from me just explaining it. All right, turn it on for me. All right, let's walk around right quick. I ain't gonna be here long, too, don't trip. All right, y'all can see me? Make sure they can see me. Donnie, you all right? You all right, Donnie? Yeah. Students, you all right? Lily, you good? All right, you good. All right, let's talk about cost basis. Y'all be locked in, George. Can they see me? All right, let's put the screen on me. All right, so let's say, and we're going to use wide numbers right here for example. We're going to use some numbers right here for example. So let's say I buy X, Y, T. No, my bad. Got to go over here. Let's say I buy X. Two, to turn it off. Let's say I buy XYT stock. Let's say I bought 50 shares at $100. Right? And then the stock takes a dip. So when the stock takes a dip, you bought another 25 shares at $85. Now, I'm not a mathematician here, so I'm just putting out hypothetical numbers. Your cost basis is no longer $100. It now may be, I'm just guessing here, y'all. Don't beat me up in the chat. Your cost basis may be $93 now. Does that make sense? Does that make sense? Let's just put the camera on my daughter right quick if y'all can, because she really getting busy. She really working right now. All right, she saying no, don't invade her privacy. Don't invade her privacy. I'm just one of those dads that I'm proud of everything. She got a notebook. At the break, she was showing me, Daddy, I'm writing the notes. I wanted to smile.
She got all the notes. Leah, let them see your notes.
Can I see your notes, baby? You want to bring them to me and see them? Sure. You don't want to get on camera? Yeah. All right. All right, so cost basis, $93. So watch this. All right, so let's say we bought 50 at $100. And then we bought 25 at $85. That gave us a cost basis of 93. Again, I'm just guessing here, y'all. So now, let's say the stock went down a little more. Let's say the stock went down. So let's say the stock now went back up to 100. Well, let me see my daughter's notes. This is good notes. Oh, she said, do I have the audacity to have money? Okay. I like that thing. Word on the street, disclaimer. Airbnb, Wall Street looks like us now, top 10 industries, portfolio, that ain't her hand, right? That's good. Tootie, Keisha, Anthony, come on, Stan, give me a kiss. Good job. All right, so let's say the stock goes up from 100 to 115. You don't buy none. You don't buy none. But let's say it comes back down. You bought it on another dip it went from 115. Let's say a pullback happens. It comes back down to $80. So you buy another 25 at $80. Your cost basis now went from 93 to maybe 90. Y'all get what I'm saying? So the cost basis is the average price you pay for a stock with dividends and everything included. So we'll put dividends and repurchase. You feel me? It's just an example. These numbers ain't specific. I'm just giving you an example saying, now what you'll do is when you buy the stock and when you buy, that's why I love for you to buy the dip. I mean, that's why I like for you to buy at price points. Because what happens is, watch this. Watch how this get good. Watch how this get good. Let's say, watch this, I'm gonna use a chart. So let's say we bought it at 100, let's say we bought it at 100. The chart goes, then it goes down. We bought it at 85. Then the chart goes, it goes to 97. Then the chart goes, we say we bought it again at 80. Watch this. If your cost basis now is 80, right? We're going to put CB. Here's the dope part about averaging down. Here's the dope part about averaging down. Because you average down, now you don't got to see profit at 100. You now see profit at 80. Or whatever your cost basis was. I'm sorry. So because your cost basis now have went down to 93 or 90, whatever we said it was, you now see profit here instead of here. So now when you get to 100, you already got $7 of profit per share. Does that make sense? Does that make sense? So now we bought it at 100, the cost basis, because this was a price point for us. We had our price point. We bought it again at 85. It ran up to 97. We was good. It dropped back down at 80. We bought it again. Price point, what we did was we brought our cost basis down from $100 to $93. Now at $93, if the stock just goes up from there for the next run, guess what? We've made money. Here's the downside to it. Not really a downside, but watch this. Damn, I know Tootie ready for me to get off this board. So we said that the cost base was at $93. We saw that the stock went up. Let's say the stock come down to, it ran up to 125. It dropped down to 110. If you buy it at 110, guess what you did? Your cost basis now went from 93. Because you bought it at a higher price, you probably bought your cost basis back up to 99. Again, it's just an example. It's not specific prices. But if you buy as the stock goes up, you now bring your cost basis up. If you buy when the stock is going down, you bring your cost basis down. As you bring your cost basis down, you now got more upside on the profit. Does that make sense? I hope that made sense. Jose, we good. Thank y'all very much. So that's what cost basis is, y'all. That's what cost basis is. It's not dollar cost. We don't dollar cost average. We average down. All right, let's go a little further, man. Breaking down a brick. We're going to make it quick. All right, this week's breaking down a brick is none other than, drum roll please, Visa, right? It's a global digital payment technology company that serves individuals and commercial clients, financial institutions and governments, entities, and merchants. Visa is the most used credit card around the world. Let's go a little further. Revenue grow year over year, inconsistent. Net income year over year, inconsistent. Cash flow from operations, inconsistent. Free cash flow is positive for the next 5 years, is good. Gross margin is up, they trapping. Earnings per share next 5 years growing, they trapping. Let's go a little further. All right, here's what I like. Return on equity is up 12 to 15%, they trapping. Return on invested capital is up 12 to 15%, they trapping. The industry is at 15, theirs is at 38% return on equity, meaning they know how to get you some money. They know how to get you some money back. That's good management. Let's go a little further. Financial health, the current ratio is 1.29, which is good, meaning they can pay their current bills. Debt to equity, debt to EBITDA, 1.8, that's good. Interest coverage at 34, that's good. That's telling us the higher this number is, the better they are at doing what? Paying bills. Servicing their debt ratio, that's good. We like a company that can pay the debt off. Let's go a little further. We see the earnings per share is growing on an average of 15% year over year, but what I do love is their free cash flow is growing at 16% over the last 7 years. What does that mean? Free cash flow is the money that a company makes from operations only. It is growing at 16% over the last 7 years. That's a good company that knows what to do with their brand, with their bread. Let's go a little further. Outstanding shares based on buybacks, and the free cash flow ratio is actually growing. We like those things. Let's go a little further. Outstanding shares. So one of the things we're going to look at right here is weighted cost average. So that's good. That's a little over y'all head. And I don't want to talk over people's head. But if you're a trap master, you know what the whack is. And it's real good. Earnings and revenue is definitely growing. And so this week we're talking about Visa, man. Let's go a little further. So last I want to show y'all something, man. Earnings, current PE is at 30. Fair PE is at 39, so that's telling us that right now, based on what its fair PE is, it is definitely at a discount. I think it can go a little cheaper. I think Visa definitely needs to be a little cheaper than that if you wanted to buy it, but you got to base it on the industry. Next, short-term liabilities, they're good. Long-term liabilities, it's an issue. Debt level is good. They are reducing the debt. Their financial position is strong. Their financial position is strong. Go a little further. All right, so that was our breakdown for me, Visa. So if you're in the triple beam team and if you're in Masters of the triple beam and lottery pick, we're going to double dose y'all tomorrow, man. So tomorrow, Jose, because we've been in town tonight. Yeah? So I want y'all to excuse me because I took a little long. So usually if you in here tonight, we usually drop the earnings, the price that we'll buy Visa at. If we was to buy Visa, the price we'll buy it at. But I want y'all to give me a pass tonight. So first thing, Jose, what time you gonna come through tomorrow? 9 o'clock? All right, so we'll come in early tomorrow. We'll drop that inside of, we'll drop that price that we'll buy it at early, and we'll drop the lottery pick in there tomorrow. So we'll back-to-back them tomorrow. You feel me? We'll back-to-back y'all tomorrow because we're gonna be in here late tonight. I don't want to do that. So we'll back-to-back y'all. Yep, we'll back-to-back y'all. So tomorrow we'll give y'all the price we'll buy Visa at. We'll give y'all 3 price points. Y'all know we do that. We'll buy the fair price, another price, and the discount price, and then we'll also give y'all the triple beam. The lottery pick. So we'll do that for y'all tomorrow. I got y'all. Tonight went later than I expected, so I got y'all. I promise. All right, let's go to our certified trap of the week, man. Y'all know I love to do this. So our certified trap of the week this week is none other than Stephen Smith, man. This was an interesting situation, man. Stephen Smith was born into slavery in Lancaster County, Pennsylvania. At 21, he purchased his freedom for $50. Question. His freedom was worth $50 in that time. What is your freedom worth right now? What is your freedom price? We need to know that. And soon afterwards, he began to ally with abolitionists cause that would support throughout his adult life. In 1830, Sam Smith became a chairman of the African American Abolitionists of Columbia, and he developed a successful multi-million-dollar lumber business. Shout out to Stephen Smith. Shout out to this guy, man. Let's go, man. Let's go a little further, man. We doing this last one is called Meet the Plug. Let's get into Meet the Plug. And this one is from Tonisha Benthal. I hope I say it right. Benthal. I hope I said it right. Benthal. On a journey to building wealth, it can feel overwhelming when you have a family depending on you and you're at it alone. Have you experienced this? What are some ways you've overcome such overwhelming feeling? Yes, I have. Yes, I have. Here's the thing, man. On your journey to building wealth, your people don't know nothing different. They all aspire to do different things. But once you succeed at it, once you show them you winning at it, they have no choice but to buy in. I always use my cousin for example. You know why my cousin really believe in this right now? Well, over the last couple years? Because he saw it change my life. I introduced him to it when we first got on it. But then life started life, and he was like, man, look, I got to do it. He did his thing. But it was easier for him to buy into it once he saw it working for me. And am I right or am I wrong, cuz? You feel me? And did I get overwhelmed? Sometimes because it's new information. New information will always overwhelm you because it's new. It's kind of like working out. When you go to the gym, you be like, damn, why is this trainer making up this stuff as he go? But what happens is you got to be able to push outside of the comfort zone. Until you create new comfort zones. So one of the things I use is fear, finally exiting average reality. Every time you create a new comfort zone, it becomes the average. And you got to keep on pushing and pushing and pushing. I'm still uncomfortable now. I ain't get comfortable once I became successful. I kept pushing it. I wanted to keep getting uncomfortable until I put myself in a situation where I feel like it's nothing I cannot do. It comes with trial and error, but it's all worth it. So one of the ways that I overcame that, it's okay to step back and reset. It's okay to step back and be like, all right, let me just gather my thoughts. It's okay to take a mental break. It's okay to take a mental break. It's okay. It's okay to step back from reading the books because I get consumed sometimes. I get up. Let me tell you what I'm about to do when I leave here. When I leave here, I'm going to go home. I got to give my daughter, going to take a shower. I'm going to put her to sleep. But guess what? I'm going to go watch the whole Trappin' Tuesdays all over again. And then I'm going to get up in the morning. I got to make sure I got the stuff broke down so I can come back and give it to y'all. But guess what? In the middle of the day, I got to still read. I got to keep reading. I got to keep researching. I got to keep learning. If you're feeling overwhelmed by learning, it lets you know that you're on the right track. Your brain, your mind is like a muscle. The more you read, the more you tap in, you create new muscle. You create new segues. You create new raptors. You create new spaces for you to go and think and flow through. So yes, I have experienced it. And the more I push forward and the more I want to go forward, I'm experiencing some more. But guess what? I walk with the fear instead of running away from it. Because guess what's going to happen? The minute you break through and the minute you get that thing you're looking for, whether it's that success, whether it's that wealth, once you get it, nobody can't take it away from you. You become the asset, and guess what? It's easier for your family to follow suit. Your family will not follow suit if you haven't accomplished the thing that you're trying to teach them. You can't teach them how to build a successful business if you ain't already showed them that you got one that's successful. You can't teach them how to be great at trade. I can show my cousin about options, not because he see I got like a 70-30 win ratio. He like, bet, I'll take them chances. He ready to learn. I can talk to my cousin now about building a business because he's seen me build the business. He see me get frustrated. He see me get overwhelmed, but he see me keep going. He just told me a couple weeks, he said, bro, the one thing I see is, bro, I see you going through it, but you ain't never stop. You can't never stop. You can't never stop. So keep going, Queen. All right, Felicia said, will you start a new recession portfolio and let us know ahead of time what businesses you are going to invest in so that we can invest in them too? First thing I'm going to tell you is, Felicia, don't invest in the business just because Trapp invested in the business. The first thing I'm going to tell you. That's your first mistake. And I know you mean that from a good place, and I'm speaking it to you from a great place. Don't invest in nothing just because Trapp invested in it. You have to create your own investor identity. Now, I understand what you mean. When I tell you about a business, I essentially want you to go look it up yourself. Here's why. Because I may buy a business and I may let that business just go down because my wherewithal, my financial fortitude can allow me to stay in that business that long. Yours might can't. I had a $100,000 loss on PayPal a year ago. Everybody can't do that. I came right back and made it back on some other plays. Everybody's financial fortitude is different. So before you invest in a business that Trapp invested in, I want you to do the research. Second, I'm not necessarily creating a different recession portfolio, but I am in and out of that portfolio. And if you're in Masters of the Triple Beam, you will know the plays before I make the plays. Well, you'll know the plays when I make the plays, which will be 2 weeks before they come out on here. So that'll give you some time. So yes, I will. But you got to be in Masters of the Triple Beam. All right. Let's go, man. We almost out of here, y'all. All right. World Track, man. So this week's World Track is brought to you by none other than the homie Hove, man. You know, we talk about the World Track because we talk about Khadijah said the track. Oh, man. It's my first time ever losing $100,000. And I did it, but I went and got it back. All right, so Hov says something that's like, man, let's tap into it right quick. He says, you want to know what's more important than throwing away money in a strip club? Credit. You ever wonder why those Jewish people own all the property in America? This how they did it. Financial freedom, my only hope. F living rich and dying broke. I bought some artwork for $1 million. 2 years later, that ish worth $2 million. A few years later, that worth $8 million. I can't wait to give this to my children. He told a lot to us in that. I'm just saying, I don't have a problem with strip clubs. You know, I love them. I'm gonna just keep it real. It's a good time. But my credit right. My credit right. You know when you go throw money in a strip club, you're not getting that money back. Ain't no refunds on that. Ain't no return policy on that. So make sure your finances in order. Make sure your finances in order. Make sure your finances in order before you give some money away that you can't afford. You wonder why Jewish people own all the property? That's how they did it. It's crazy that we speak that because the guy who I got this from is Jewish. And we have great conversations. We have great conversations, man. There's a book that you should get called, I think it's called Business Bible Rules from the Jewish or something like that. It's a great book. It's all about discipline. But then he goes a little further and he said, ever living rich and dying broke. So that's so pivotal in our community, y'all. Because as I look at the stats and as I look at what's going on, I don't gotta know a person personally to look at the numbers and say all these people can't be on. All these people can't be popping. The stats say it ain't just right. And so there's a lot of pressure to a lot of new people in the game because of Instagram. And that pressure is making people commit suicide. That pressure is making people not appreciate the wins that they're having. It's a lot of people that flossing on Instagram, but when they pass away, they people hitting me up for GoFundMe money. Bro, you had a Rolex. You got jewelry. You got Cuban links. Why am I paying money for a GoFundMe? Why you don't got life insurance, fam? Our priorities not always in order. If you got enough money to be on Instagram traveling and doing all that, holler at Lindsay Smith, the agent. Shameless plug. She gonna help you get $1 million in life insurance. $200,000 in life insurance. We gotta just play the game different. He said, I bought some artwork for $1 million. 2 years later, it's worth $2 million. 3 years later, it's worth $8 million. Appreciating assets. Art is considered alternative assets. It's just about us playing the game different. Yeah, it looked good. It looked fun. It's good to do stuff on Instagram. I'm going to tell you something that was so dope to me when I figured this out. If I had a Gucci shirt and I wore the same Gucci shirt every day on Instagram, a lot of people would be like, Trap, why don't you take that, man, you done wore all a G off that Gucci shirt. I can take the same Wallstreet Trappin t-shirt and wear it every day and nobody wouldn't say nothing. They say it's branded. They'll say it's marketing. Bro, you a good marketer, bro. And once I figured that out, yo, I stopped wearing every day. Literally, yo, 85% of the year, you will see me with this on. It is what it is. And I'm not saying nothing against nobody to do what they want to do. I'm just saying that you got to play the game different. Once you play the game different and get you some money, get you some assets, you can do whatever you want to do. Your financial wins are predicated by your financial habits. And we're going to shout Jay out for that. All right, man, so this time we get into our segment of wise words from the OG. It's easy to let go of something if you're going to get something better from it. Tonight, you got to let it go. We often avoid that which we haven't been exposed to. And since we all agree that exposure is key, when we don't see the opportunity, we have to have the audacity to create it. As a man thinking in his heart, so shall it be. A lot of you struggle with what you think. On the outside, it's fabulous. But on the inside, those thoughts have imprisoned you. We're going to talk about letting go, y'all. Tonight, I know for a fact some people let it go. Tonight, I know for a fact that some people decided that they was going to open a new door. You are conditioned 100% by your thoughts. Your thoughts, in turn, create the perspective. The perspective, in turn, becomes the reality in which you live in. How do you see life? How do you see money? How do you see wealth? How do you see financial freedom? How do you see financial independence? The real question is, do you truly think it's attainable? While most people say, I want to be a millionaire, I want to be a billionaire, when I ask you the blueprint, you don't have one. And if you don't have a blueprint to get where you say you want to go, then that tells me you truly don't believe in what you say you believe in. One of my favorite sayings is, you have to change for what you want, or you got to change what you say you want. What are the things that you really want? Freedom is an acquired taste, y'all. And while everybody say they want it, everybody not willing to put in the work to get it. There comes a time when we must make transitions. What are your financial strengths? What are your financial limitations? I challenge you today to write them down. You may be good at investing, saving money, but you're not good at investing money. Well, that's what we need to work on. You may be good at making money, but you're not good at saving money. That's what we need to work on. What are your financial strengths? What are your financial weaknesses? What are your investing goals? And I ain't talking about the ones we just write on a paper. I'm talking about the ones that we actively go after. Like I'm actively going after everything that I know I'm capable of doing, and I'm actively going after the things that I'm scared of. I want you to understand that it's possible. Because your possible becomes someone's in your family's normal. When I look at that little beautiful girl right there, man, I want to change the things that she think is normal. As funny as it may sound, man, she did something the other day that made me laugh, but I had to correct her about it. So my car's in the shop right now. So I got a small little car right now. I got a little like Escape or whatever it's called. I ride it like it's a go-kart. I be having fun. I picked my daughter from school. She said, Daddy, what is that? Where the Bentley at? I laughed at it. And I talked to her a minute. I was like, listen, it ain't about the car. Let's be grateful that we got another car to move around in. But immediately in the moment I understood, I changed her normal. She done got accustomed to it. She hop in, she close the doors, she play with the things in the back. Her normal is different. And so as a father now I had to go in and say, okay, listen, it's okay that we got that, but if we in a Bentley or if we in the Escape, we still the same. Ain't nothing changed. We grateful for it all. It's a plus that we have this. It's a plus that we able to drive that. But she's 7. Do you have the audacity to choose wealth is what I'm asking. Do you have what it takes in you to constantly build out to create new normals? Because the normals that you have, that you inherited, were almost detrimental. The normals that you inherited ate away at your fear. The normals that you inherited made you look at money a certain way. The normals that you inherited made you look at wealth a certain way. We have to unanchor from those old normals to create new ones. Again, we talked about the Israelites, and that's one of my favorite things because no matter what, they made an exodus from the past to go into something different. What is your exodus? What is your exodus? What is the blueprint? In a Trappin mantra, we talk about being the architect of my family's legacy. Where is it? If you had the opportunity to write the legacy out, what would be the first thing that it did? What would be the first thing? What's the first thing that you got to do over in your family? Is it the way we see money? Is it the way we spend money? What is it? The first thing that I did over for me as to create my family, every child born got to have a custodial account. It's just a must. Are you the asset or the liability to your family's blueprint? Is it? Is it saying, okay, every time we get taxes now, are you spending money or are you buying assets? I'm at a point now in my life where we don't even get taxes no more. I'm just trying to figure out how not to pay the government so much. What are you tearing down? Reconstruction, demolition. These are the things that have to happen in order for you to advance, in order for you to move forward. Every week when you come to Trappin Tuesdays, my goal is to help you change your philosophy on how you see money and on how you see investing. And if we can do that, then we can create a whole bunch of millionaires and a whole bunch of wealthy families, man. Listen, man, it's your boy, the Wall Street Trapper. Welcome to blah. Thank you for tuning in to another great episode of Trappin Tuesdays, man. Listen, man, hit the like button, man. Subscribe and hit the bell. Most importantly, man, make use of the information. Each and every Thursday, man, we drop 5 o'clock on all podcast networks. We drop. Every Wednesday, Thursday, Friday, we dropping episodes on the page. Go get them. But if you don't do nothing else for me, man, I want you to do this thing, and it's amazing for me. I want you to next week tell somebody what we doing here. We putting out a lot of good game here each and every week, y'all. We should be having 2,000-3,000 people in here. It's cool. We're going to keep putting it out. But this channel grows by telling somebody about what we doing. Y'all came tonight and got a master class. If this your first night, we do this each and every Tuesday. The dope part about this is this should be a party. This is a financial party. This is a wealth party. This is a learning party. The people in your circle who you cool with, guess what you should be doing? Hey, yo, every third Tuesday, 7 o'clock, meet me at Trappin Tuesdays. Let's both have pen and pads. Let's watch. Let's take notes. Let's break down what Trap talking about. Each and every Tuesday. Listen, let's come to my house this week. Let's come to your house this week. Let's go to your house next week. Why? So we can all take notes and write down what Trap talking about so we can analyze the notes together. And for every friend that say they ain't got time, for every cousin that tell you I'm busy, that tells you a lot about where they at. Because this free. 31 weeks in a row, free. Free game. You can't say you ain't come here for 2.5 hours, 3 hours, and you ain't learned something. You don't feel empowered. You don't feel like you got the audacity to choose wealth after this week? What we doing? What we doing? I'm gonna tell you what we doing. We trapping! Good night, y'all. I love y'all, man. I'm gonna see y'all next week. You hear me?